recording this session because this is going to be another fired up section. And then obviously I know we're all going to benefit. All right. So hold on a second. I've got my guy going on the TV making noise as well.
So just looking at this market, you can kind of see how the market comes up here and hit these lows.
Right. So where is everybody from today? I want to know where we are all from.
Zimbabwe here.
Zimbabwe. Can you type it in the chat room, please, so that I can have a clue as to where we're from? UK. Wow. Wow. Quite a lot of people from London. Seriously. Those are my town people. Zimbabwe, Canada, Ghana, Nigeria, South Carolina, Nigeria, Germany, London, massive Nigeria. I think these are the, wow, Nigeria, London loves you. Wow, thank you, Tanman. Interesting. Right. So I'll delve in. So the first thing that I'll look into, yeah, because I don't want any surprises, is I want to check my fundamentals. Chioma Lagos, of course. One of my fundamental charts is going to be the Forex PSAMI. All right, Forex PSAMI. Right, and it's the same thing as Forex Factory. The only reason why I love Forex PSAMI, it goes more in depth into what is going to happen. All right, so I can see blatantly that on the 30th of March, which is going to be today, there's nothing going on. Tomorrow, which is Sunday, that's the beginning of the day. So we've got what is Chinese manufacturing index. All right, so with the China manufacturing index, as everybody know, China is a country that manufactures quite a lot of goods, and those goods are then supplied to the whole entire world. Okay, so
Bola can't hear you anymore.
Can't hear you anymore, Bola.
Can't hear you.
Bola, can you hear?
Bola, we can't hear you.
oh, can you hear me now?
Yes, we can.
Yes, now we can hear you.
Oh, so sorry about that. I didn't know that this thing has been for a very long time, and I've gone over a couple of details. So you can hear me now clearly, right?
Yes.
Yes.
All right. So what I'm trying to say to you in essence is the first thing I'll try to check is I'll check my fundamentals. I want to see what is coming up. I want to see what is coming up during the new week. I want to see how that data that's coming up is likely going to affect my trading. Say, for example, people who keep position over the night can find themselves in a tricky position if Please bear me a second. Just a little bit of a phone call right there. All right, sorry about that. Going forward, so I want to see what is going on. I want to know what's going to affect whatever position that I have in the market before, and say, for example, if you keep your position overnight, or most probably if I'm going to be taking a trading position in the new week. So instead of me jumping into the market without knowing what is going to happen, I would have seen that China is releasing some manufacturing data. This is purchasing manager index, yeah, and this details what the this is what is going to give us a clue what the purchasing manager, the big companies in China, what they are buying. We want to know what raw materials they are buying. We want to know whether they are buying anything. If they're actually buying anything, then you'll see this figure. You'll see this, the value of this figure will literally go up from 49.2 to 49.6. Probably if we have anything above 49.6, then that's going to be a surprise into the market. That's going to affect the direction in which the market is going to go going into the new week. So if I look at it, let me check here. So then I'm saying I've got the second site, which I check as well, which is Forex PSAMI. Forex PSAMI kind of go more in depth. All right. So the first thing I'll do is I'll go to the tools. I'll go to economic calendar right there. Over here, I can check which countries I'm working with. So I've got, I can say I'm working with all, I can check Switzerland. I'm looking for China, basically. Canada, Australia. So China, I want to see China data, right? I can even check all if I want and check all. Then you're going to have quite a lot coming up. So say, for example, can you see hear me though?
Yes, yes.
Oh, all right, great. So I've got Fed Evans, one of the Fed chairmen in the United States is going to be speaking, although whatever it's going to say wouldn't have much impact. But literally speaking, I've got the Japanese Industry Activity Index, right, which is the Tankan index that the Forex Factory is showing us over here, Tankan Manufacturing Index. So you start to get yourself familiarized with the name. We've got a couple of data coming up in Europe, although they are low impact. So those data are not reflected over here in the Forex Factory. All right. If we look at the high impact, which obviously we can just come here and uncheck all this, yeah, and just see what is high impact for the particular week. You can see that on Monday, we've got Theresa May. She's going to give a speech. All right. That is definitely high impact. You know, the way the pan has been going on, you can see that on Wednesday, it's a key day as well. Key interest rate decision for New Zealand again. You know what I mean? And that has been moving so severely. Oh, sorry. This is last week. Let's go into the new week. Sorry. So in the new week, where we are, China Caixin Manufacturing Index is going to be reported. We've got the Europe Consumer Price Index is going to be reported as well. On Monday, we've got the Europe. So a lot of things that's going to deal with the Euro USD is going to happen on Monday, all right? Because we've got the retail sales that's going to happen, and we've got the ISM manufacturing PMI that's going to happen. And for some of the people that has followed me trading the news, I've literally showed the strategy in which I can employ around this time to trade all this news to you. If you haven't checked the video, I will employ you the way that we caught 600 pips in 1 minute in a safe manner. Let me get you the video onto the chat room so that you can have that video and see how it's done. You know, we can't go through every single thing in one single day. All right. So this is my, let me go to my channel. 1 second. This is my channel, and then you can see how the news is being treated. And on this particular night, within 1 minute, we're able to cut 600 pips. I mean, everything depends on your level of experience. Everything depends on practicing. But what I'm trying to show you is there's literally anything that cannot be done with this market. Okay, there are also different kind of ways in which we can literally be prepared to battle the financial market. All right. So on Tuesday again, we have the RBA rate decision. These are the kind of data that are good to trade as well. I mean, it can go in all sorts of different kind of ways, but yeah, don't worry about that. Just practice and practice, then you get to realize which one is going to be the best for you. Then we can trade this again, ISM manufacturing non-PMI, right? So all this PMI is the purchasing manager index. It's showing us what the purchasing managers are buying, whether they are actually spending the money or whether they are not spending money. So when they are spending money, obviously the economy is going to be booming. Over the last couple of few years, if you can see this chart properly, you can see that things is going up and down, and then look at the way that they've been spending. So if we just take a look at it from here, they went all the way down and then they spend quite a lot in this particular month here. Let's have a look at what month that is. All right, so if I bring my chart up, so in that particular month, they spend quite a lot. Now it's going down. It went all the way down, whereby they are not actually spending that much now. Spending is going back up. So that's positive for the economy. And then, yeah, that will be positive for the Forex market as well. Why do you need to know all this? Well, it's not important. And at the same time, it's important because you want to know what is going to surprise you on your particular position. You see, like when it comes to trading, time is very, very important. Yeah, time is one of the key important things in trading. If I go to my Telegram group, right, there are a couple of lists of topics that I wanted to teach, okay? And these are more or less for my advanced classes at the same time as well, because majority of the newbies might not be able to really understand or get hands-on of it. So let me check in photos. So if I check photos, you'll be able to see some of the attachment. Let's see. Voice message, photos, videos. Yeah, I think there's actually an Excel sheet for the topic. So topics. Let me say Fibonacci. So 1 second. Trading journal. All right. So these are some of the things I'm looking at to bring you guys into, which is very important. Number one, trading journal. You need to treat this like a business. You know, you need to literally have a notebook or a recorder whereby you are recording your trade. If you treat this like a business and you have that notebook, these are something that will give you the reason to ponder, okay? So say, for example, you enter a gold trade or you enter a Euro USD and you actually write it down that I've got a template which we use in the institution as well. I will see how best I can make that available. Yeah.
Hello, Mr. Bola.
Yeah, go on.
Yeah, please, there's a noise going on in your background. I don't know what's that noise going on in your background. Please check your YouTube. It's like something is playing.
On my YouTube. Oh.
On your YouTube, yes, like something is playing there. There's a noise going on.
Well, as you can see the YouTube, there's nothing playing, but if that is the case, let me take this one down first of all. All right? Probably someone else. And as you can see, there's nothing again, probably someone else. Let's have a look.
Yeah, possibly. I don't know who is making this noise.
I think maybe mute us all, Bola.
I believe I'm not the only one here.
This one and mute this one. This one needs to be. Can you hear me though? 1 second.
Yes.
You can hear me.
Yes.
How about the noise? Has it gone?
I don't think it was in your background.
It has gone. It's not.
Sorry?
It's gone. It's gone. I don't
The
think
noise
it
is
was.
gone, right? And
Yes.
you can hear me. So we're cool. Either we're cool all the way, right?
Yes.
Someone says the noise is still there.
Mhm.
How about now? Is the noise still there?
No, there's no noise.
No,
The person
no.
should mute his own microphone. The person should mute his own microphone.
Right. So no noise, no noise. The mics are on. All right. So if you can, there's no noise. All right. A couple of people said there's no noise, so I believe there's no noise, and we're just gonna work with no noise. But in case there's a noise, just let me know as well, so that we can always check. So I want to bring your technicals up to speed, and bringing your technicals up to speed, it's not just going to be beneficial to you alone. It's going to be beneficial to the journey going forward, especially now that you can have access to a funded account whereby there will be cash going around for everybody who actually want to make use of that cash to be able to trade. So you need to know some few things that's important. And part of the things that's important, as I'm talking about, is time. Time is very, very important when it comes to trading. Okay, time is very, very important when it comes to trading. And when we get more advanced, when people are really keen to understand this, we'll be able to talk about what is time. Because the understanding of time gives you the ability to, when you understand time, it gives you the ability to see the overwhelming effect of time on price. But we will get there. So once you check the Forex factory and you check the calendar, we know what is going to affect us on Monday. It's going to be in Euro, it's going to be in the USD, it's going to be in China. And the time where those effects is going to happen as well, the time that is going to happen is very, very important. So if you're going to have a position on at 12:30, say for example, on Monday, and that position is going to have US dollar in some of the pairs, literally you want to be very careful, because this news will come out. If you are in one particular direction, these are the kind of news that can shift your position to another direction. Okay. Trade journal once again. All right, so that is in the 1 second. All right, so these are the topics that we're going to be looking into going forward. All right, we're going to be looking into technical analysis. We're going to be looking into Fibonacci retracement, Fibonacci projection. We're going to be looking into extension, Elliott waves, harmonics, market geometry, channels, trend lines, pattern, multi-time frame divergence, 80/20, and 00/50 psychological level. This has got to do with the quarters theory, candlestick, 4-hour, 12 EMA, or the EMAs, daily pivots for previous day, weekly, monthly high and low, gaps, supports and resistance, market profile, time frame transitions, how time frame transition actually occurs, and how you can get to understand. So if you want to follow this, if you really want to follow me, you're literally going to have every single thing that's got to do with your market in your toolbox. So we're going to be doing things like STEM. STEM is about having what is your setup. Then you want to know what your trigger is. You want to know what your execution is. Then you want to know how you are managing that trade, targets, session starts and end, figures, correlations, straddle techniques. Straddle techniques is the same technique that we use to capture that 600 pips in the overnight session during the news. You know, all these things are the things that are there that you need to know as time goes forward as well. You know, if you really want to become that master trader, if you really want to be able to just buy in the market, look at the market, then you can understand reference point, trend chain, allow the rule of 5, 75% of the apex, Ichimoku, analyze for long period trade for short strengths and weaknesses, structural point, 5 questions to ask. What is the major trend? We've covered this before. Do we have any trend changing pattern? Are we near support and resistance? Is momentum increasing or decreasing? What is the market condition? Initial balance and market side, high probability trade, quantify my risk, currency indexes, edging, risk appetite, risk aversion, long range day, squeezed in candle, patterns, open in relation to previous day range and value area, volume, excess. Be ready for what is coming. All right. So on the Telegram group, you can see the list of this topic. Okay. Today, I want to look into open in relation to previous day range. Just a slight little topic to add to every single thing that we are doing. All right. It's one thing that I'm going to be looking into. All right. So if I go to our chart without further delay, right, and we're going to be doing harmonics with it as well. All right. So there's what is called. I want you to pop on the chat group the charts that you want us to look at, because I want to move very fast today. I want to get some charts for you. I want to be able to analyze those charts, and then I want to see what is going on during the new days from those charts. All right. So if some of you are in, if some of you recognize this strategy, it's all good. If you don't, it's all good as well. So the first thing that I normally look at, last week when we were doing this class, we were having a discussion about the dollar index, right? And I literally tell everybody my expectation in the dollar index, all right? And then my expectation in the dollar index is the dollar is going to rise. If some of you are in the class last week, I remember quite fully well that we have that discussion. Can you see the week? Can you see the week, this new week? 1 second. Let me just find the templates, the particular templates that I'm using. All right. So we talked about how we are expecting dollar to rise, okay? And then literally dollar rose during this week, all right? Which means every other dollar pairs are tumbling at the same time. But what we are trying to say is this: if we look at this on possibility of, let's look at this on the possibility of a shorter time frame, because we actually had an analysis on one of my, on the other PC that we use. So if this is a 30-minute chart, and then we start the week from last week starts from that particular Monday will be the 25th, all right? So I want us to quickly follow what the market does from that 25th. Let me go backward so that you can see how to approach this market, all right? So 25th. All right, so this is the way the market opens. And I literally said to you that when the market opens, there's every possibility that the dollar, some people were asking me, so as soon as the market opens, should they buy first? Then I said to you that no, that's not the way to play the business. That's not the way to play the game. The way to play the game is, let me put it on the 25th. So the market opens. The type of open that you have in the market on a particular day determines what is going to happen, all right? So when the market opens, we literally saw this move down, okay? So even if you have at the back of your mind, because what we know and what we see is this. Let me take you back to what we've seen on that weekly chart. So we saw a doji week, yeah? We saw a doji week with a bounce off the 36 EMA. The people that follows me know what we use EMA for, to find our trend direction so that we can stick with that direction so that we don't get confused over the new week, all right? So we can see that the blue has literally crossed, all right? This is a big indication that we are going up, all right? And then obviously when we saw another bounce of that 36 EMA, gives us the sense to say that dollar is going to go up. So beyond that, let's now see how that happens. So the market tried to fake you out. The market knows that everybody is already thinking the dollar is going to go up. So this is how you now start to track it, okay? So before that Monday, right, this is the kind of trend line that you have in the market. Particular trend line. All you have to do is just keep extending the trend line, okay? So if you keep extending that trend line like that, can you now see where you're going to enter to start to buy dollar? Can you see where dollar breaks out and gives you the sign that this is the beginning of continuation? Can everybody see that?
Yes.
Something as simple as a trend line can literally guide you to let you know when the beginning of a move is going to occur. The break of this particular trend line, especially if you have an hour trend line, all right, or 4-hour trend line, the break of that particular trend line, you can see that huge break. Can you see the break? And this is not just an ordinary break. This is a very strong break. This is a momentum break. Or this impulse alone, this break on the 1-hour chart, and then that break did not only break the trend line, but remain solid. All right. So despite the fact that we had this break, we got a couple of retests as well. These are the places where traders will be thinking, okay, probably it's going to be coming down again. But once you've had a break of the trend line, yeah, an hourly trend line, 4-hour trend line, that is the beginning. That is the sure banker beginning of your move. Okay. Once you have a break of a trend line on some of these huge time frame, right? That will now signal the continuation that you are expecting based on these weekly charts. All right. So we saw a possibility for continuation on this weekly chart. Okay. So instead of us jumping in, all right, we wait for price to tell us that it is ready to move. All right. So if I put in some indicators like the triple fire indicators, if you really want to be someone that tied themselves down to indicators as well. Feedback from someone again. Interesting. Let's see. Bear with me. I got this popping up. Is that okay now?
Yes,
Is that
it is.
better now?
Done. It's done, yes.
All right. Thank you. Right. So we just keep monitoring and just keep feeding me in and let me know. So the use of a single trend line can literally bring a lot of changes to your trading decision. All right. So this particular trend line occurs. Let's see. And if I tie that down to a couple of other things, right. So for the lovers of indicators, obviously, which time frame is better to draw trend line on DXY? All right. So that's a good question. One of the most important time frame to be watching and to be watching the power of that time frame will be the 4-hour chart. Okay, will be the 4-hour chart. Then going down to the hourly chart. All right. So for this illustration, we are looking at the 1-hour chart. So we have seen the indication that dollar is going to be going up. Everything is all about what? Everything is all about being patient. Okay. Everything is all about being patient. The patience that we need span through, let's see, how many hours? Let's look at it. So can you really wait? So that is when the market opens 4 hours, 8 hours. We can use this tool to find out how many bars and multiply it by 4. Okay. So we've got 9 bars. That's 36 hours. That's 1.5 days. Okay. 1.5 days of fake out, which means whatever trade that you are taking on Sunday, yeah, till the end of a Monday, can put you in frustration. All right. Can put you in frustration if you are not following the proper procedure. All right. So all you want to do is wait. Just have that little bit of patience. Have your trend line in place. Have the patience to see the trend line break. And then that is the confirmation for you, in as much as this line up with the confirmation that you are seeing on weekly. All right. That is the confirmation for you to say that there's no going back. This has now begun to resume moving up. All right. All right. So let's go back to weekly now and let's look at this week. So if I just quickly delete this, if I pull in back a little bit of a template, which is not really necessary. But what I'm trying to show you here is some simple stuff that you can literally implement for you to have a sense of direction. All right. So say for example now, I've deleted everything. Look at where we are on the dollar index. Can somebody look at this and then be able to think of what is likely going to happen? Just to have a thought. We are not predicting, yeah, but what we are trying to do is we are trying to understand what kind of direction we can possibly face going forward. All right. So as you can see over here now, look at where the chart is. Literally, you can see we have so many zones. We have so many zones around there. All right. So the dollar is heading towards a what? And somebody tell me where the dollar is heading towards. Based on every single thing that you've learned.
Resistance. Uptrend is going up. It's going to resistance.
Thank you. So everybody knows that the dollar is going to a resistance. So if you know that the dollar is going to a resistance, and the resistance is even major, as Shami said over here. Okay. And the dollar PS starts to continue to go down. Can you see that there's possibility for reversal of all those moves that is going down in your Euro USD, in your Pound USD going into next week by the time the dollar hits this resistance?
Yes.
Exactly. So it may reverse. So, and these are the reason why you just don't have a fixed mind on one particular position and just believe that, yeah, you have arrived. You have to be prepared and see things from a very bigger time frame, from a very big from a very big perspective, from a very top-down analysis. You have to see it. But that still doesn't mean that if dollar gets here, we won't eventually break at some point. But we are already sure that we are heading towards a disaster, towards a wall. And what do you do at a resistance? If you are heading towards a resistance, what do you do at a resistance?
You start thinking of selling it.
I'll look out for a reversal.
Exactly.
I'll look out for a reversal.
Exactly. You start thinking of selling, you start looking for reversal. So going into the next week now, right? Or you take your profit as well. Going into the next week now, and dollar is going to literally push up, all right? If you get caught in that push up and you just believe, I don't need to have a target profit, I don't even know where my target is, then you start encountering this reversal. Every single pips that has been caught will just literally be gone right there in your face. So simple techniques, simple knowledge can literally make a lot of difference. So we know what dollar is going to do going into next week from now on now. We know that we're going to get to an area whereby it's going to find a little bit of rejection. You know what I mean? But that still doesn't mean that the trend is not up. Eventually, what we are waiting for is the break of this zone. Okay? So eventually what we are waiting for, so the dollar chart is just a chart that you just check once a while and see whether this zone has been broken, which is the zone of 97.69. And then you know that the moment that zone is broken, especially on a higher time frame, you are looking for possibility of retest of that zone on your smaller time frame. So say, for example, if you go back to 1 hour chart. So let's prepare our mind for what is likely going to happen in the dollar. So when the market opens on Monday now, let's have a look at it. We have our zone up here, right? And having our zone up there is telling us one thing, that's where the resistance is. Okay. What we're likely going to be looking for is possibility of a pattern forming closer to this resistance. So if you have an harmonic pattern that forms closer to this resistance now, then there's every possibility that this is going to become a very much more stronger zone, and that strong zone can literally lead to what? Can lead to price decline. All right, so when we look at this chart from a very big point of view, so this is an hourly chart, okay? So if this is our level of support, all right, let's see what is coming up. And then we literally take it to the level of resistance over there, all right? And then we have our B point, okay? So if we have our B point to be 80 level, currently this is a C point, okay? That's C currently. We are still looking for, and this is a big harmonic pattern, so don't mind it. We are just trying this. So if you have a big retracement back to 80 level, what kind of pattern are you looking for all the harmonics traders?
This is a bat.
That's a butterfly.
Sorry?
That's a butterfly.
So,
What's the number?
so the B point is showing you we have 1 second. Let me get this right. The B point is showing you we have about 80 or 80% of 0.80 retracement.
That's a butterfly.
So there'd be a deep shark, a deep crab or a butterfly.
Right. So somebody said deep, somebody said butterfly, somebody said what?
Crab or gartlet?
Deep
Somebody
crab?
said
I said butterfly.
right. So someone said butterfly, right? Someone said
yes.
crab. So all right. So if we're gonna take one of the two, which one do you want to take? Because you have to be specific. You have to know your numbers and you have to know what you're doing. Okay. So
In considering what level, sir?
right. So the B point
In
is
considering what level?
say that again.
In considering what level? You mean the B point?
Yeah,
Maximum of 78 points.
That's all you need to confirm your harmonic pattern. The B point is all you need to confirm the harmonic.
Okay. So I will take it as a butterfly.
I've got someone that says shark. I've got someone that says butterfly. I've got someone that says deep crab. That should be butterfly. All right. So let's clarify this. Yeah. So for the person that says shark, yeah, and I want everybody to pay attention. A shark pattern, we have only two patterns whereby the C is always above the A.
Yes.
So if we've got the C above the A like that, then what you are seeing over here, let me see, what's the name of my friend? Sirac Simarian. What you're seeing over here is going to be either a cipher pattern or a shark pattern. So shark is completely out of the picture, and that's how you will be. That's how you're going to be eliminating the process. Okay, so shark is completely out of the question, cipher is completely out of the question, and then the next thing is the first thing first is your retracement. There's only one pattern, yeah, that's got its retracement back to the 78.6 region, and that's going to be a butterfly pattern. Okay, we've got what is called a deep crab pattern, which the retracement needs to get to 88.6%. All right. So in this case, this is a butterfly pattern. It's not even a crab pattern. All right, because the retracement is at 78, around 78% or 0.775%. All right. So if you have a butterfly pattern, what is the D point going to be?
1272.
141.
127 to 141. All right. So
okay, ideally,
sorry.
I hear me. Okay, ideally, I know it's minimum of 127 to 161, but I prefer my entry to be at 138.
Can you repeat that?
Okay, I said considering. Hello, can you hear me?
Yeah, I can hear you.
I said considering the day point of a butterfly, usually I know it is minimum of between 127 and maximum to 161. But I prefer taking an entry at 141 or 138. Then stop loss goes below.
So who is giving me that clue?
Bola, it's an echo now.
1.618 to 2.24.
You say what?
No, what's the name of the person that's giving me?
DDFX.
All right. Just give me.
1.618.
So guys,
2.24.
I would like to say thank you to the guy giving us that. Let me find you. Or send me a message, please.
Okay.
Is that Tobi Olumide?
Yeah.
All right. Thank you. I really do. Sorry, I really do appreciate your input. And guys, this is how we learn. Okay, this is how we learn. All right, this is how we learn. All right. Yeah, I know there's an echo. If all right, can you hear me now?
Yes.
All right, great. Sorry.
Yes, I can hear you now.
Interesting. So what we're looking for, if we see a resistance up above here, and then we want to trade exactly, that's what we are looking for. That's what we are looking for. But the first thing that people will see on the chart is that particular pattern that I draw. Now I'm now changing your perception into what you're going to be looking for when it comes to resistance. Is you want a pattern that's not going to give you just an M pattern or an M shape. You want a pattern that's going to be giving you a W shape. All right. And in that case, what you're going to be looking for is that particular W shape. All right. So when you look at this particular chart, can anybody see anything that's W up here forming? So I can say most probably This is looking like a W to me. W goes, sometimes you don't even know how to write W anymore when you draw so many patterns. So this can this be a pattern that is coming up? Can this possibly be a pattern that's coming up? For the mere fact that we have that retracement at that particular level, this is not a pattern at all. It's nothing. So even if you can't find a pattern, for whatever reason that you can't find a pattern, it's not a problem. All you have to do is, you know that there's no harmonic pattern occurring in the dollar index. Well, you have your key level based on weekly. You know that that's a major supply level. Look at the way that price rose up to that level, and then you can start to see the decline. So we expect that when price is going back there now, there's every possibility that price are going to start falling. So what you want to do with that information that you have now is, say for example, can somebody give me a dollar pair?
NZD USD.
Sorry?
NU.
NU, NZD USD. All right. So the next thing I want to show you is this, yeah? All right, so take note of this, all right? Depends on your objective in the market, okay? You know, I've given you two websites. One of the other websites I'm going to give you before you start trading so that you can know what you're doing is what I call the babypips.com, all right? So what do you use this one for? You want to have this website, you want to go to the tools, you need a lot of tools. You know, if you're a doctor and you don't even have stethoscope, you're a doctor, you don't even have blood pressure machine, you're a doctor, you cannot even measure people's diabetes, you're just wasting your time. So as a forex trader and as a professional trader, because that's what I'm trying to develop, I'm trying to develop leaders here, I'm trying to develop people who are going to have a deeper insight into the trading environment. You know, you can have your trading strategy in place and just continue on that and continue on that. But one thing I want you to understand is, as a trader, is we are always evolving. Yeah, you can see harmonic all the time, and then now you get to a point in time whereby you'll be like, wow, so what happened? Some of these harmonics failed. Why would they be failing? You know, is there something that I do not understand that makes this particular pattern fail? Then you start to quest. Then you leave harmonic a little bit, you then start to delve into another thing. You know, this is life. There's nothing that is 100% guarantee about our lives. You have to understand that there's nothing that's 100% guarantee about our life. But you have to now have also different kind of confluences together in one particular place that will now make whatever decision that you are taking much more stronger. All right. So even if I draw an harmonic pattern now and the D point is there, there's every possibility that that pattern will work. Depends on the kind of other price confirmation that's aligning to it. So we're going to go into that. So the third tool that I'm going to give you today is what is called the position size calculator. All right. So with the traders funding opportunity that you have, say for example, you get yourself a $10,000 account, all right, which is massive. The particular risk that you are expecting on that $10,000 account shouldn't be more than 1.49, all right? So we are not going to be giving $10,000 and then people are going to be risking unnecessarily, because you have the opportunity to get up to even 1.2 M. Depends on how you want to take this serious. You have the opportunity to get up to that. All right. So the percentage risk that you're going to be taking is 1.49%. All right. Using these baby tools, I'm going to copy it and put it in the chat room. You need to be able to do this and do this right. Okay. There are also different kind of strategies and style that you can employ in the market. All right. But if you want to become a money manager, if you really want to become how to manage other people's fund, because now that you are getting the skill, you will be able to use this skill not just for yourself alone, but you'll be able to use this skill on a diverse level. And I don't care what part of the world that you are in. You know what I mean? I want the opportunity to extend to every single where in the whole wide world, whereby people can learn this opportunity from everyone that they are learning from, but they start to get a proper understanding of what they are doing. let's assume your stop loss is about, let's say your stop loss is about, let's say in this particular case, your stop loss is about 30 pips, okay? And you want to trade the Euro USD, all right? So when I calculate this risk, that shows you that you're going to be risking a total of $149, all right, on one single position, okay? Meanwhile, you can quickly now learn to analyze different charts and split this $149 into 10 different positions, if you get where I'm coming from. So the maximum position that you're going to be taking with this will be, with that 30 pip loss, will be 0.5, almost 0.5 standard loss, which is half a standard lot. That's the maximum that you're going to be taking. So you want to look at one single trade and say to yourself, I've got so many charts. I'm learning how to understand how to read the market, how to understand the market, because what I'm going to give you, it's not just going to work for one thing. It's going to work for every single opportunity that you've got in the market. And majority of the people that follows me knows that. So you want to divide this into possibility of, let me say that, oh, today I'm just going to take 5 positions. So each and every one is going to be 0.1, 0.1, 0.1. You know what I mean? And once each and every one is 0.1, you can take 5 different trades, 5 different positions, and then you achieve the first level that you need to achieve, because first of all, you're going to get a $2,500 life account before you actually get a $10,000 life account to see the way that you trade. You understand? So me giving you this clue is because I want you to succeed. Giving you this clue is because I want you to succeed. It's because all right, 1 second. If you, let me bring it up to you. 1 second. Give me a second, please. So I want you to start to see risk in a different manner. I want you to start seeing yourself as a millionaire already from now on. I want you to start seeing yourself as an achiever. I want you to start taking your trades. 1 second. All right, so we are on position sizing because this is key. I don't want you to miss up on an opportunity of a lifetime. Let's assume. All right. So this is the $10,000 account that you're going to get. All right. So with the $10,000 account, you are expected not to risk more than 1.5% of that account. And that's the reason why I'm good with, so what the advantage of taking 5 positions of 0.1 and not 0.5 and not just take partial profit. Right. Thank you. Good question. Now you are thinking in one particular direction. You are thinking of one single chart. You've got also different kind of forex charts that you can look into, right? So if you've got an opportunity, have a look at it. So you've got all these charts: Euro, US dollar, Pound, US dollar, JPY, US dollar card. You can do it that way as well. If the opportunity that Bobby Collins for you, if the opportunity that you see in the Euro, US dollar, yeah, or in whatever fiat that you've taken, if that opportunity is so 100% to you, say for example, there's nothing 100% in trading, you have to understand that, yeah, and you want to just take 5 positions or take the whole of the 0.5, it's not a problem, you know. But one thing I'm now trying to say to you is, if you take the whole of the 0.5 on one particular position, that you yourself know that there's nothing that is 100%, yeah, that's why the fact that we can achieve 90%, 80%, even a little bit 99%, sometimes 100% in the way that we trade. Obviously, what you want to do is you can take all that. I don't have a problem with that. But if you now find yourself in a position whereby you have 2, 3, 4, 5 pairs that you want to take, wouldn't it be sensible to just divide the amount of money that you have on one single on all those positions. That is what I'm talking about. So most probably once you go through this, you know that on that account, you're not going to risk more than $149. That risk, that's what we call portfolio diversification. Anything can happen. A flash crash can happen in all the dollar pairs. You know what I mean? And it's against your position. You take that position, and then if it doesn't work out for one reason or the other, if you've got other 4 little position that the flash crash does not affect, then you are protected. Now I'm shifting your mentality and your mindset into diversification, into opening it up. You can do twin trading, triple trading, quadruplet trading, penta trading, also different kind of trading. It's fine, yeah. But at the same time, just have a little thing on the side of your mind that, okay, it works. What if it's on a day whereby something has happened? Then you have another option. You should always have option. All right. All right. So that is on that. So you use this tool again. I don't know if I've copied it for making sure that your risk is in perspective. All right. So that's it. And for everybody, baby pips. So the next tool that I wanted to give you is this. All right. Because somebody mentioned New Zealand USD. We're going to analyze the New Zealand USD, but let me now give you this. Who mentioned New Zealand USD? The person that mentioned New Zealand USD, are they still in the room?
Yes. Mentioned USD.
So if the person is still in the room, I want you to follow this. Yeah. So this is a website called WhatsApp. Right. And what do you do with this website? You go to Forex volatility. Okay. Forex volatility. So this is what I want you to pay attention to. All right. Can you see pips right here? Can you all see pips? Can
Yes.
you see? All right. So if you can see pips on Aussie card, the expectation in pips, I'll show you how to use this website. The expectation in pips per day on the average is about 61 pips. Okay. It's about 61 pips. On Aussie Swiss, the expectation in pips per day is 53. Aussie Hong Kong dollar is 443. Aussie Yen 67. Aussie New Zealand 52. So if I come over here, and that's over a period of 10 weeks on the average, if I say New Zealand USD, okay, what is the expectation in pips? That's 55 pips, all right? That is what you are expecting to get on New Zealand USD on daily basis. Let me now show you how you can now use this to your advantage, okay? I'm throwing in some nuggets over here, and those nuggets, I know that they're going to work for you. I know you'll be able to implement it on your trading going forward. All right, so you've seen that on this particular pair, the maximum pips that it can move, 55 pips. It's not such a bad thing, you know. But how does it actually does that move? What kind of a time period does that move occur? So we have 24 hours in a day, right? So over the first 1 hour when the market opens, we usually do around 12 pips, okay? By the second hour when the market is open, then you're going to see 19 pips. Looking at this 19 pips, that's the highest that you can capture in one go on this pair. Can you see that? All right, so subsequent time, you can capture about 10 pips, depends on your position, all right? But when you now look at it, the best day to trade this pair, now, we've got 5 days, 5 trading days, okay? All right, so I'm going to copy that as well. You know, I'm giving you quite a lot of nuggets here, and I want you to make use of it because I want you to succeed. On Monday, this is not going to move more than 40 pips in some instances on the average, all right, except if something happens. On Tuesday, this is not going to move more than 43 pips on some instances, except if something happens. On Wednesday, it's going to move about 80 pips. So a lot of people are going to, now you can be building on ideas on the days that the traders are actually coming to the market to trade this pair. That's going to be on Wednesday. Okay, so some people will sit down with a pair from Monday to Tuesday, Wednesday, and they are still expecting a return because most probably they bought at a very high point. Yeah. And then all they are saying is a drawdown from that particular high point. Then they won't see anything happen most probably on Wednesday, and they will be like, eventually, glory be to God, I'm out. You know? But if you now get to understand what's happening behind the scene, these are the days that the bank are going to be, you know, everything is structured. Yeah. But do you understand the structure behind it? And that's the clarity that I'm trying to bring into trading for you. Yeah. We can have fun with harmonics, fair enough. And that's what we're going to do now. So on Wednesday, we are expecting a major move on this pair. On Thursday, we'll be seeing about 53 pips, and on Friday, about 55 pips. All right. And this is the kind of the volatility that's going on in this pair over a long period of time. So when you look at it from what's it called? From the April 28th or from April 2018, this pair was moving significantly strongly. Yeah. And then the volatility was dying down. There's no such a move anymore. Look at it. Yeah, so rather now where we are in 2019, you can see that this pair is not really moving so serious like you're welcome. Like all this period over here. All right. So now you can have a clue and say to yourself, if I'm trading New Zealand US dollar, I'm not going to have a serious much of an expectation. My position are likely not going to be running in a volatile manner. I can be able to manage this trade as a newbie. I'm not just going to see a single 300 pound move, or sorry, 300 pips move in one go, you know? So these are the kind of tools that you need to help yourself develop, all right? So if I quickly analyze this, all right? So we're looking at the New Zealand USD going forward. We're going to look into a couple of pairs today, and we're going to be analyzing them going forward. So what do we know about the dollar? You remember the dollar is hitting a resistance, right? So we know that it's likely going to hit a resistance before it continues back up. All right. So if the dollar is likely going to hit a resistance before it continues back up, which means we're likely going to encounter some sell-off in the dollar going forward, which means if that sell-off occur, what are we expecting in the New Zealand dollar?
Go up.
Exactly. Thank you.
Bye.
All right. So good point right there. The reason why I'm doing this seminar today is we are heading into a new month. All right. So what happened towards the end of the month is key. All right. That's what is going to give us a clue into the new month. All right. So when I look at this, I can see that the only thing that this has been doing on my previous monthly high-low range, okay, I like to bring the market into perspective, into seeing every single thing that's going on in the market. I want to know what is going on over the last 4 months. So on my high-low range, let me pick up the magnitude. I'll put a cyan line, all right, on top of that. Okay. And I like a cyan line in case anybody want me to help them to look at their charts. I would like their monthly to always be on a cyan line so that I'll know that we are always on the same page. So if US dollar going down, exactly, depends exactly. So now you are building a sense into sensible. All right. So I hope this is becoming beneficial. I hope you're gaining. I hope I'm not giving you crap.
No, you're not.
If you are gaining, type in the chat room. Let me know that you are benefiting. It's quite important for me not to give you something that's not going to be useful to you. While I'm trying to open up your eyes as well. Great.
Of course, there's always something to learn. I'm really impressed. Let's go on, sir.
Say that again.
I said, of course, there's always something to learn. I'm really impressed. Please go on.
Thank you.
Thank you. You're welcome.
All right, so I've now I know where all the big money investors are, yeah, and this is where we get the money out of the market. I know where they are. I'm looking at this chart. I'm saying to myself, the first thing I'm saying to myself looking at this chart is this: the trend is down, whether anybody likes it or not. All right. That's the first thing I'm saying to myself. And I see that we are in a very serious long-term downtrend. And how do I know? Thank you. Thank you. You know, when you have 12 years of battling something day in and day out, and that's the way that it's going to be for you as well, you know, because my dedication to you is not just about my dedication to you is because of the kind of vision that I have for the world. You know, the kind of visions that I'm seeing right now in my bedroom for the world in the next 5 years, in the next 10 years, in the next 20 years, 30 years, 40 years, when we are not even existing anymore, when our children are going to take over, when our grandchildren are going to take over. The world is not going to be like this. Yeah. If there's one thing that I learned from one of my oldest mentors is there is always opportunity in change. Okay. Change will always occur. The only thing that is constant in life is change. The market will be changing with time. The price is not going to be in the same place. As those changes are occurring, opportunities are following in. Okay. So look at this now. We've had almost 4 months of nothing happening. But does it mean this is how this market is going to sit forever? Impossible. Change will occur. You know what I mean? And when that change occurs, this market can decide to expand up or can decide to expand down. All right. So currently, what are we doing? We are consolidating on the monthly. All right. I can see that the trend is down because the blue is below the orange. All right. So I'm not going to be trading against the trend. Looking at this for now. Then I can see that's not only the case. I can see that we've formed a serious low down there. All right. And then we retrace all these retracements. Look at that. This high is the amount to this high. Yeah. So this retracement is a shift for something to start to go down. Okay. Despite the fact that we are slowing up. All right. So I want to check my bias that I'm seeing on monthly. I want to look at that same bias on weekly. Okay. I want to see whether my weekly is confirming the same thing, because if anything is going to shift or change, we begin from a much more lower time frame. Okay, so the monthly has told me that we're going down. There's nothing that's changing from us going down. When I look into the weekly now, all right, is the session recorded? Yeah, it's recorded. All right, so and this is the reason why my session lasts a very long time, because each and every time when I do sessions like this, I just want you to take something home. I want you to gain seriously. I want to give you something that you'll be able to ponder over. I want to give you something that you'll be able to go and add to your techniques that you are using. I want to open up your eyes into what is actually happening in the market. All right. So when you look at this, so we're talking about that blue cross. All right. So we've had that blue cross on weekly as well. But what are we seeing on weekly? Are we seeing a little bit of change occurring or not? So whatever change that's going to happen on a higher time frame, we start from a much more lower time frame. All right. So over here on weekly, I've actually seen a little bit of a blue crossing above the orange. That is telling me something as well. All right. So that is building another picture that, wow. So despite the fact that the monthly is down, the weekly is now showing me a slight indication of possibility of going up. Okay. For that possibility of going up, I'll just be looking at my highs and my lows. What can you see here? What is happening on this week? What is happening on this chart? Can somebody give me a clue of what they think is happening on that chart?
Consolidating.
Consolidation. All right. So our first question is, what is the major trend? Okay. Our second question is, what is the market condition? So the market condition is a consolidated market condition. All right. So what do you do in consolidation? I will show you. All right. I will show you how to deal with consolidation and deal with consolidation in a wicked way. So each and every time that you see a consolidation, you'll just be more than happy to know that you can trade and you can win. So I'll look at the highs and lows as well. All right. The reason why I look at the highs and lows is because I want to know where all the next level of investors are hiding. So if the big bank, if the FOMC, if the Reserve Bank of New Zealand, if they are hiding on the monthly charts and they are looking at monthly trends, I want to know what the hedge funds are doing. I want to know what the local little banks, what they are doing. And they are the ones that are going to be moving, and they are going to be making noise first of all and be saying, yeah, this is not favorable to us anymore. We need a shift. So when they cry, the big bank too will end up listening sooner or later, matter of time. So that's the reason why the weekly is important for you to have a knowledge of how to measure it. I've given you what the trend indication is on weekly. There's a slight bias of a change going on, slight bias of a change. That doesn't mean that a major change has occurred. But when I see this blue cross, I want to see it down back again for me to know that this is literally going to be going down. All right. So I'm looking at the last 4 weeks. I've checked this week, this week, this week, and this week. So I'm done with the last 4 weeks now. All right. Starting from last week. The next thing I want to look at is this. I want to quickly look at what kind of candle do I have on monthly. So my monthly candle and which area do I have that candle. All right. So my monthly candle is showing me a serious indecision, which means over the last 4 weeks, there's nothing going on in this pair. All right. So if there's nothing going on in this pair, why do you want to trade it? Anyway, because it's consolidating, it's not trending. So you can't hold any position on this pair for a very long period of time, 1, 2, 3 days. And this is how you get to find out what you need to be doing and how you're going to approach this. So most probably, maximum pips. What's the maximum pips you are expecting in a day on this, on the average?
53.
54.
The average.
55.
54, 53.
So when you now have this at the back of your mind, can you now see that you are building a powerful sense into how you're going to approach this? All right, so look at the weekly. So we've seen the weekly. We know the weekly is doing its own consolidation too, and it's going on. So I'll quickly look into the daily as well. All right. So the daily will give me its own picture too. So following the same principle to know whether I'm trending or not, when I start to see that all this is going on, all right, all the moving average, they are crisscrossing one another. There's nothing that is definitive. Look at this. Can you see this cross? And can you see the continuous move? All right. So over here, we've seen the cross. There's no continuous move. We see cross up again. There's no continuous move. That is a complete sense of consolidation going on. Okay. So this is the kind of a market whereby you want to be careful. You want to know how to trade this market, how to treat this market, and how to be able to make money from this market, because if care is not taken, these are the kind of markets that just turn at any point in time. So this is the daily now, right? So the daily chart is showing us that over the last 1, 2, 3, 4 days, we've seen what is called a little bit of a downward pressure, all right? And that downward pressure met some kind of support, all right? So the kind of support that I met is what we're going to be looking at going forward. So we have support over here. I'm going to change that to blue. My weekly one is always magenta. That's more or less like purple, the money color. That's the real actual money color. And then I want to check my last 4 days as well. And you see how everything is going to be coming into perspective going forward. When I see any overlap, when I see the overlap of weekly and daily, then I know that that's an high probability zone, okay? I know that that's an high probability zone. We get to discuss that as well going forward. When I see overlap of weekly and daily charts, highs and low area, I know that that's an high probability zone. And you'll be able to confirm that for yourself as well going forward, all right? So that is 1, 2, 3, and then the last one is going to be, my lines may be faint. I like it faint. Before, they were not used to be faint. They were so thick and strong, but sometimes they obscure your justice. All right. So I've got my 4 days intact, and I see that we've literally encountered a sell-off. Now we are hitting a little bit of a support, and that's where we are. And then you remember, we are talking about the dollar hitting a resistance, right? So for now, if the dollar is going to be hitting a resistance, we expect buying to start to come into the New Zealand. Most probably the New Zealand dollar start to see that very early. And that's the reason why this move down didn't continue. All right. So say, for example, now, just because we are anticipating that particular fall in the dollar, if the dollar starts to go up, okay, if the dollar starts to go up before it starts to fall, if the dollar went up on the whole of the Monday to go and attain that particular resistance zone, what's going to happen on the New Zealand?
It will fall.
It's going to fall. And when it's falling, look at where it is. What kind of a condition are we going to be getting again?
Another resistance.
Sorry?
Consolidation.
Consolidation. Who said that?
Fumbi Lekweju.
All right. Thank you so much, Mrs. Fumbi. So we're going to be looking for possibility of consolidation. We're not actually going to be looking for possibility of this to rally. Okay? We're going to be looking for possibility of consolidation because look at this. This has gone up. If the dollar decides to push up, it's literally not going to make the New Zealand stronger. It's going to make the New Zealand a little bit weaker. You know what I mean? It can make it a little bit weaker and it can make it a lot more weaker. So this is how you're going to be looking at strength and weakness indication. And when you look at it, what can you see over here? Can you see the way the price comes down over here to this particular structure? Over here. Maybe you can see. So let's go to 4-hour charts now, yeah? Let's quickly go to 4-hour charts and we put some proper analysis onto this. Okay? All right. So what do we have over here in all this zone here? So we have support over there. So the price has broken down through support. When price goes back to support, it becomes resistance. So the price is going back to support. When price goes back to support, it becomes resistance. All right, so now you can see the support much more clearly. All right, so let's do this. Let's bring this into perspective in a much more clearly form. All right, so what we can see over a long period of time now is a complete mess on this chart. We can see a complete mess on this chart. We can see that we have our highs over here and we have our lows over here. So if you're looking for a swing trading opportunity, yeah, a swing trading opportunity is literally going to be in this pair from this area of high to this area of low. All right. So, and that can net you close to about a 3 days or let's say a 4 days worth of a trading day. Sometimes if you get that 50-50 pips consistently. So these are the areas where you are looking at on this particular chart. So it's an area of massive consolidation. And how do you trade it? So this is what you want to be looking at going into the new week, okay? When the market opens in the new week, because we are expecting consolidation, we expect price to do something like this. We expect price to come to this area, yeah? When price falls down to this area now, yeah? The moment price gets to this area, we are looking for whether price will be able to stay in this area or continue going up. All right, so how do you do that? In all this area, these are the areas of lows and highs. Let me take you back to the daily for you to have a clear perspective of what I'm trying to show you in terms of consolidation. So if it's a consolidated market, right, let's assume the dollar falls a little bit for support before starting to go up. So price is going to move up to this area, yeah? The moment price gets to this area, these are the areas whereby you are looking for possibility to sell, okay? These are your high probability area to look for possibility to sell because there's so many things margin up into this area. You see where we have 68.28. Let's have a look at it. Right, so me giving you this point doesn't mean that you should just go and sell immediately, all right? This is not harmonic. Just follow what I'm trying to show you, 68.2, all right? So I'll add that zone over there. That's a high probability zone whereby you are expecting reaction, 68.2. And you have another high probability zone at the bottom at 68.3. Sorry, 67.87. All right, I'll show you how to make use of all these areas, 67.87. And then you can apply this to your any other thing. Thanks a lot for no problems. All right, so let's go to the 4-hour chart quickly, yeah? So this is a 4-hour chart. You're looking at the charts. Basically, you know that there's a support zone over here. All right, it's not a major support zone, but that's an area whereby you are expecting reaction. You want to know what kind of numbers that you've got over there. 1 second. Let's look for our number they've gone. Wow, they've seriously gone. Let me bring them back into perspective. All right. I think we've got two of them. This is 167.87, and the second one is actually going to be at the top. We now want to build a picture around this number. So it is better for you to spend 3 hours on analysis and quickly take a trade and make money rather than you spending every single moment trading. Okay, that's how you'll be able to trade profitably. Analysis goes a lot into your trading decision. All right, so let me now bring this into perspective. So I employ the rules of trend line. I like trend lines a lot. All right, so my first trend line will possibly be somewhere over here. Okay, and what this trend line is telling me is price was going up, and then suddenly we break down that trend line. All right. So when we break a trend line, what does that indicate? That indicates the trend will start to go down. Okay. But in a consolidated market, the price will stop somewhere again and start to go back up. All right. 1 second. My daily.
The most important thing for me is to do everything I can to make sure.
Right. So when it comes to a consolidated market, when you are seeing a consolidated market, all you want to be looking for is the high. When you get to the high, you want to sell the high. Okay. All you want to be looking for is the low. When you get to the low, you want to buy the low. All right. So when you are buying the low, you are actually buying the low at a very low risk level. Okay. When you are selling the high, you are selling the high at a very low risk level. Everything that you need in this market now is this. Look at your eyes right here. Yeah? Look at your eyes right here. So your stop is literally going to be above somewhere over here. Let's calculate that stop for once. So you've got a 39 pip stop. All right. So with me now, if I want to be a sniper trader, I want price to come as close as possible to this 9 pip stop. I want price to come as close as possible to this. Yeah. In this case, if I'm considering this area, I want price to come as close as possible to all this area. All right. So if price come as close as possible to all this area, because it's a consolidated market, yeah, I'm not going to be checking what is in the middle, you know, because I know that I can get that high price. So when price gets to that particular high, all I'm looking for is I'm looking for any sign of rejection. Okay. And I'll then scroll down to my lower time frame to look for that sign of rejection. Then I'll be able to take the trade from this particular high right there. Yeah. And when I'm taking this trade, I know what I'm doing straightforward. Let's have a look at it. Take a look at this clearly. So the traders that are pushing the price up to this level, what are they doing when they get to this level? Can you see this particular candle? Let me bring it into perspective for you. So we have this level, yeah? This level is 2 levels combined together. Can you see we have the monthly with the cyan line, and then we have the weekly with the magenta line. And the areas that we are looking at to sell this is going to be the 60. And this is a high probability trade for you. Okay, this is a high probability, low risk trade for you. So we are looking at 69. We are looking at 69.41 and 69.38 area, just 3 pips difference. Okay, so you have this trade in your portfolio. What you are looking for is for price to get to this area. All right, look at when the price gets to this area. Can you see a bullish candle at all? Or can you see the wick? What can you see? You can see the wick. Look at here. Can you see a bullish candle approaching this area or the wick? So as soon as price is getting there, does it mean that some people know and all they want to do is just sell it down? Yes. All right. So moving forward, and that's your area. That's where you want to play. Look at it again. So price is at this area. That's the beginning of the sell. All right. and that's where you're gonna sell. And then you just know that you want your risk to be above here, whatever the case may be, is whatever the case may be. If price come back and take you out, then it's not a problem. But now we've broken this trend line. So where price is acting now is at the low. Okay. So if we are at the low, what can we see at this low? Now I want to start putting this low into a serious perspective, right? So that you can know how to attack this low going forward into the new week. All right, so I've got this particular trend channel, okay? And when I'm looking at my trend channel, I know where all my lows is on that trend channel. And I can see, according to the trend, we've got a push higher, over here, a push higher, which means price is slightly going up, okay? And then price is slightly going up again. And all this is confirming what is happening in that weekly chart as well, that, okay, we've had a cross on weekly. We are looking for possibility of price to continue to go up. Obviously, when price goes up and reach an area like this is when we're going to be in the short. All right. So what are we seeing on this 4-hour chart? Can we see any possibility for harmonic at the bottom over here that gives us the opportunity to buy and push the price all the way up? We can look for it. Can we see any possibility of anything forming up there? We can look for it. All right, so in this particular case, let's have a look at whether we have any pattern coming up. If I take the high of the zone right there, if I walk this all the way up, almost to 98, price came all the way back down again. What do we have? All right, so what I'm going to do is I want to check where price actually closed, 93. So do I really like this particular harmonic? One thing that I want to check. All right, so if I've got 93, I'm looking at what kind of a pattern am I looking at when it comes to this?
What's your B point?
A butterfly. A butterfly.
No.
Sorry,
So the
Paula,
point
what's
is
your
at
B point?
93.
Okay.
The B point is at 93.
The only one that I know that goes there
As long as
crab.
B point has exceeded
A deep crab.
73, 77, I take it as a butterfly.
You are looking at it as a butterfly.
Yes.
Okay, and why?
Yes, because a maximum of 77.8 valid the butterfly patterns, and maximum of that I can also take it as a valid one. Because price never took back, considering the C level, price never took back the previous A level, and it's still valid for a butterfly.
Okay, I've got so many people that believe that this is a deep crab pattern. Do you know about crab pattern?
What?
Do you know about crab pattern?
Oh yes. I just recall that.
All right. So
88 level, yeah, that is a crab pattern.
So to Shami, so to Bobby Collins, I give my heart up to you. Thank you so much for giving us that opportunity. We determine the B point. All right. So, yeah, we're gonna go into that. All right. So this that is coming up over here, more or less like a deep crab pattern. Okay, it's a deep crab pattern. All right. So guys, this is what I'm gonna do. I'm gonna take a 5 minutes break. We are just 2 minutes over the hour. I'm going to take a 5 to 10 minutes break. All right, I don't want to congest your brain. We've been going on for 2 hours. Let's take a 5 to 10 minutes break. Let's get some drink or get some water. Let's clear our throats. You know what I mean? And then let's digest what we've talked about. And then we now go deeper in harmonics. Then we'll be able to talk about the zone and everything. I want us to have a clear brain by the time we are coming back to it. Okay? All right, so we take a 5-minute break. All right, and after that 5-minute break, we come and delve into. Sorry, we take a 10-minute break. All right, so 10-minute break. And during that 10-minute break, I'm just going to put on some motivational video. And then we take it from there. So we're on 10 minutes break for now. We'll be back at 12:13. All right. And thank you guys. Let me get on the motivational video. Let's see if you are saying boxing. If you are saying boxing, don't complain, or whatever you're saying. Just some motivational video to continue to make us stronger. So when we come back, we come and delve into harmonics. Yeah.
You heard me tell the story with the lion and gazelle. You're still stuck. You're a gazelle. You are a gazelle. You need something to motivate you. What happens to the gazelle when the lion ain't chasing him? What happens is he's nothing. He stops running. Why? Because he always needs something external to motivate him. There are a lot of people who are not successful in life, not because you ain't got talent, not because you ain't got skills, but your character ain't right. And I've told you this before, that if you're not careful, your talent will take you places that your character can't keep you. So what's your motive? The reason why you can't get up at 4 o'clock in the morning, the reason why when I say get up at 6, you look at me like I'm crazy, is because you don't have that thing that's driving you, that's pushing you to say no to the alarm clock and wake up no to the snooze button. When you get that extra assignment, that extra life, the reason why you can't do it is because you don't have the right to that motive that's pushing the action. What's your why? Somebody came up to me. They said, E.T., man, I'm tired. I put in the work, E.T., I'm not seeing the results. I did what you told me to do. I read the book you told me to do. I put in the hours you told me to put in. I'm doing it, and I'm not seeing anything. Listen to me closely. Why do you do what you do? That's so important. It's not enough just to be a doctor. You got doctors who got terrible bedside manners, terrible. You got lawyers who are skilled but arrogant. If we talk about character right now, what's your motive? What moves you? What drives you? And whatever it is, sports, life, business, whatever it is, health, listen to me very closely. You gotta change that mindset. Even in your action, while your action is good, you gotta ask what drives it, what guides it, what moves it, what's the spirit behind it, what's the reason behind it, what's the purpose behind it. When you want to succeed as bad as you want to be, when you ain't got nothing left in your tank, you got to think about the people in your life that you're doing this for. And then if you can think about them, you can go one more mile. You can go one more day at work. You can find a scholarship. Listen to me, when you're doing it for somebody else, when you like that lion, if I don't ride, if we don't ride, if I don't ride, they don't eat. This is it. I wish I could back up. This is what we're doing. I wish I could tell you something else. I wish I could tell you you're tired, go take a break. I wish I could tell you you're tired, rest for a year. I wish I could tell you that it's going to get easier. I wish I could tell you it's going to get easier. I wish I could tell you that if you just keep going, it's going to get lighter. The rate is going to get lighter. I wish I could tell you that, but that's not the truth. The truth is, you got to find something within. You got to find something within, and that's got to push you, and that's got to elevate you, and that's got to drive you, and that's got to move you. You find out what your why is, and your why got to be deeper than you. When you find your why, you don't hit snooze no more. When you find your why, you find a way to make it happen. It's time for you to look within yourself and decide.
All right.
I'm in charge of my destiny.
So if you see here, the second part
Time to face yourself.
is just about to start.
Yourself in the mirror.
If you want to invite some of your friends, if you want to send the link to the chat room, you can do that. I'm literally just going to continue.
I'm going to make it.
And if you can hear me, let me know.
Time for doing. That's the time right now. Time for acting on your dream. Find out what it is you want and go after it as if your life depends on it. We can decide to take charge of our own destiny, begin to truly live our dream. Listen to me close. When you get to the point where enough is enough, when you get to the point where it hurt real bad, when you get to the point you can't take it no more, when you get to that point, I'm telling you, I can't explain it to you. But doors start opening, opportunities start happening. But what you cannot do is you cannot quit during the process. You cannot give up because it ain't what you see. You cannot give up. Champions keep going when they don't have anything left in their tank. That's the difference between the greats. That's what separates them. When they don't.
Right. So if you're still here with me, I'm back. I'm back a little bit earlier. I just want us to look into charts. Yeah. So going forward, we are looking into the possibility of a deep crab, and then we are looking at this particular deep crab based on. Go ahead and do that then. Sorry, guys. One second. Go for you, baby girl.
I'm in training.
Okay. Is this in my screen?
Only the time that you'll be back.
Can you see my screen?
It's only showing the time when you will be back.
Oh, one
not the
second.
chart.
Right. No problems. Let me get it on for you now. And then back to the screen. So we are talking about possibility of what kind of a pattern that we are seeing over here. So someone is trying to ask me a particular question. Considering deep crab, the normal crab has to be taken out, I think. Well, the B point is what makes the deep crab deeper. All right. So, and how do you do this? The first thing you want to be looking for, let me take this out. Let me bring you back into perspective, is looking at this particular chart. If you want to be looking for a buying or a selling opportunity, for a buying opportunity, let me give you the picture right here. For a buying opportunity, all you want to be looking for is an M-shaped harmonic pattern. You want to be looking for anything M-shape on your chart. Look at here. Can you see this? Say from this low, you went all the way up, then you went down, and then price goes down like that. That's an M shape, all right? So let me show you what I'm talking about. So that I want you to start to perfect your harmonic. I want you to start to see it clearly, and I want you to start to be able to work with it as easy as possible as well, yeah?
My nails are dry, but they're a little bit sticky.
All right, so you can put it more in the fan, then it's going to be fine, all right? Thank you. All right, sorry about that. You can't run from them, can you? All right, so I have a tool called polyline. So if I put this tool like this, to that low, to that low, to that, that's the kind of a M-shaped pattern that I'll be talking about. Look at this. So that is giving me the opportunity to see a buying opportunity in the market. So when I see anything like this, I'll be looking for a buying opportunity. Look at it again. I'm looking at this, a buying opportunity. So let's start putting this into perspective now so that you can be seeing how the buying opportunity occurs and you can see it for yourself. It moved from that particular low to that particular high, to that particular high, to that particular high, then to that low. So if I take this on a smaller time frame, let's assume I take this on a 15-minute time frame for us to see it much more clearly. Although I can see it on a 4-hour, and I want you to be able to spot it as well on any particular time frame. All right. So even if it's not a pattern, but for the mere fact that you know how to look for it, it will now make the pattern to be much more visible for you. So you are looking for an M shape. Once you find anything M shape, then you can now confirm your ratios, whether they are right or not. That's a very fast way to be able to draw money. How many people want to know how to draw their money? Very fast way. So if you're looking for a buying pattern, let me now bring you back into perspective. You see this particular pattern that we have from X, let me take it out. So I was talking about we're going to be looking for M shape, although we got this from a 4-hour chart, okay? So what I want you to look at is this. When market is going up, let me bring it up a little bit more. All right, I think it's much more better. Yeah, it's drier. All right, so you can. All right, so look at this. Price is going up, coming down, going up, coming down, going up, coming down. You can leave it on, please. Sorry, guys. Then we have each and every time that price goes up, it retraces down, it goes up, it retraces down, goes up, retraces down, it goes up, retraces down, goes up, retraces down, goes up again. Yeah, it retraces down. What's the difference between this retracement and all these retracements that you are seeing? Can anybody show me what the difference between this retracement and all this retracement that you're seeing? Because harmonics has got to do with retracement and extension, okay? So each and every time when price is going up and it's retracing down, what you are looking for is any particular retracement that is bigger than every other retracement, okay? So in this case, price went all the way up. We can count this as one leg and then for this particular retracement. That doesn't mean that if we delve into 1 minute time frame, we won't see so many harmonics on it. There will be so many harmonics that we'll be seeing on this one. All right, so if I now take my tip tool, say for example, all we are looking for is the retracement, right? I put my Fibonacci tool on there, all right? The minimum retracement we are looking for in any harmonics pattern is 38.2, okay? So when we see this particular retracement, that is giving us the sense to know that we have an harmonics in place. Whether I, sorry.
Either way, babe. I love you more. I miss being
Sorry, give me a second. There's someone with their TV or their whatever on. If you can take it down. Thank you. All right, so the minimum retracement, one thing you need to know, first of all, minimum retracement for every harmonic is 38.2. All right, and that would be like the 1/3 of the entire move. So you can gauge it with your eyes. Okay, so say for example now, let me bring this into another perspective for you. If you know how to gauge anything, if you can gauge anything, and if you can understand something, just by seeing it, it's much more powerful. Look at this particular move, yeah? All right. Minimum retracement is about what? 38.2% retracement, okay? So if I clone this, and I bring the same down here, okay? That's 2. And I clone again, and I bring it down to the 3rd level, all right? So that is almost like 3 times, all right? But 30% is going to be exactly 3. Now we are closer to 40%. That's the reason why I said you're looking for that possibility of that retracement. That will be 3 times the whole length, minimum 3 times the whole length of what you are looking for, all right? But if you have the tool, right? If you have the tool, you pick up the tool, you start from a level of resistance, a level of support, which can be the low on a chart, okay? And then take it up to that high, okay? And then bring it down to here, all right? Now you can see the exact ratio at 45.8. So what this is telling us is this. Then it shows us that the move from this low to this high, retrace all the way down, give us about 45% or 0.5% of this entire move is this retracement, okay? So the next retracement that we want to see is, can you see A right here, yeah? Can you see A over there? And can you see B over there? Can you see that?
Yes.
All right, so if you can see A and B, now you've checked the retracement of this X to A, okay? That retracement gives you a value of 45, all right, or 0.45 or 45.8%. Now you want to check the retracement of A to B, okay? Which means, and that A to B will give you a point on the chart. The chart is what's going to show you that retracement. You want to see how this price move all the way down from this A now to B, and then retraces back up, which is going to give you your C. Remember, how did you get a B? You get a B from the move from X, which is this area here, all the way down to the IA, okay? And then you follow the market for you to retrace. So at the last retracement point, that is going to be your B, okay? Your B, or whatever value the B gives you, which is this 45, is the beginning of you knowing the kind of harmonics this can give you, okay? And I'll draw a chart to show you what kind of harmonics you can find at 45. The first one that you can find at 45 between 38.2 to 45 is what is called a BAT pattern. So that actually starts from 38.2 to 50%. That's called a BAT pattern. All right. And then you're looking for a retracement for that BAT pattern, which is going to be the retracement of A to B. Okay. And that comes here. All right. that moves comes here. All right. In as much as it is not over 1%, it is not over the value of 1. In as much as it is still within 1 and not over 1, that is still valid. Okay. And then now, just because I've seen my B retracement and I know that I'm looking for bat pattern, the C to D now is going to give me exactly 88.6%. All right. So I'm now tracing the market. I'm following the market. I'm following it. Look at where the market stopped before it starts to go up. So the moment I see that the market stopped here, before it starts to go up, I want to check the value over here. Look at, I want to check the value of X to D. All right, to see whether it lines up at 88.6. What do I have? Do I have 88.6 over there?
No.
What do I have?
0.78.
So 0.35. The people that say 35 are the people that get it right, which is the value from X.
Yeah.
All right. The value from X. Can you see this line? Watch this line, yeah, from X to D. Okay. What do we have?
Yes. 34.
30 what?
38 now. 38.
38. So if we have 38, where are we supposed to go for a bat pattern? We're supposed to go all the way down to 88.6. Okay?
Yes.
88.6. So if we're going all the way down to 88.6, for example, playing with the tool. Oh, sorry, I deleted that. I'm going to do it again. So you start from here. Now what you want to do is you want to measure. Let me show you what you're doing. You are measuring a move that goes from the low over there, yeah, to that arc, and then you are literally measuring the retracement of it. You are measuring how it comes down first of all. Okay? So you are measuring the retracement of this move. How far did it come down? So that's what I'm going to do with this tool now. So from here, the beginning to the end, but I'm looking for which retracement is much more deeper in all these open lengths. So this is the one that looks much deeper to me. So that is 1. Now I want to check the retracement of A, B. The retracement of A to B becoming over there. All right. Now I want to check what my D level is going to be, which is going to be my C to D. My C to D is always at 88.6. And that 88.6, I'm going to see from the move that I'm seeing from here. Look at that. Can you see that? Can you see 4.9 is 88? So somewhere else. So if I have this price money to drop down to over here now, then I'll be looking or be confirming a particular bad pattern. But look at where price turned back. All right, so price turns back over here. So this pattern, let's assume I don't know what is over here. Let's assume I see this pattern from here. The moment I get my B, yeah, and my B is giving me a C, that moment I'm knowing fully well that I'm expecting a bad pattern and I want my entry to be just over here, right? This is where my entry is going to be for a bad pattern. All right, so if my entry is over here, let's assume the price now come and do this. Would I be able to get inside that trade?
Not at all.
All right, so am I going to lose anything?
No.
All right, so if I put a pending order on this, do I have to worry myself?
No.
All right, so if the price doesn't get there, what do I do later on when I check that the price has actually turned and start to go?
You delete it.
I just cancel my pending order. So that is completely out of the way. I don't have to worry myself about that trade. I don't have to babysit and be looking for it, whether it's going to get there or not. All right, so the next thing I'm going to do, maybe I come back after a couple of hours and I see that, wow, okay, price is going up. I want to look for another harmonic pattern now, yeah? So what I'm going to do again is I'll just delete this. I don't need it anymore. But if I'm choosing the same point again, yeah, then if I keep following the market all the way up, I find a deep retracement over here, right? Price went up, gives me this place. It doesn't make sense to me. Then I can look at the entire move again. So if I'm looking, all this fund now has now become an invalid harmonic. If I now look at another length and say to myself, price moves up, all this one is invalid. It didn't give me anything anyway. And I look at this area of resistance, okay? If I get here, if I look at this retracement, is this deep enough?
No.
Do I have a deeper retracement somewhere here?
Yes.
This
Yes,
and this, which one is
Yes.
most?
The one you are touching now is multiple.
All right, so am I going to use this when this one is
No.
there?
No, no,
All
no.
right. So this is going to
No.
be my retracement of the whole of this move from here to here, all the way down. I'm not going to use this one because I have this one, okay? If I use this one, let me show you what's going to happen. So I'm looking at a move from here to here now. We've forgotten completely about this. I took it down there. If I use this one, okay, then I want to find the retracement of A to B, which is going to be the retracement of this A to B. And then that will be on this area here, okay? So this is supposed to be my C. If I take my tool down again, what kind of retracement do we have again? Over here, at B. What is our B?
47.
47. So if we have 47, what kind of pattern are we looking for?
A bat.
Sharp.
A bad pattern.
A
Right.
bad
So if
pattern.
we have a bad pattern, we want a completion at 88.6. 88.6. All right. So if we're looking for 88.6, it's going to be somewhere over there. Do we have a bad pattern in this case?
No.
Almost.
Almost.
No.
No.
All right. So we don't have a bad pattern. We don't even have a completion over here. And then we've left a big chunk of the chart if you are considering this place. All right. So if I delete this again, if I take my tool and I went all the way from this X to this A, and the most deepest retracement, okay, which is going to be over here. So look at this deep retracement now. When we check here, yeah, the retracement that we got from here to here is this one. When we check here, now we are having a different retracement at what level?
0.1.
All right, so which is almost at 50%. Then this move now from A to B is giving us a C, and price keep going up, keep going up, keep going up, and stop at this area. All right. So we actually got a retracement of AB at 89. That's what we have. All right, which is still valid because we haven't gone above the A. All right, for a particular, what kind of pattern are we looking for at 50%?
A bat.
A bad pattern.
At this B, which is 50%, is a bad pattern. And bad pattern is going to be at what?
86.
88.6.
88.6.
So 88.6 goes all the way down to this one. Do we have a bad pattern?
No.
Yes.
Yes?
No.
All right. So if we have a bad pattern, that means we are looking for price to come to this D.
Yes.
Does price get to this D?
No.
No.
No, it doesn't.
All right. So this is a pattern I did not just complete. So obviously, I'm not going to be able to take any trade in these circumstances. So this is not a bad pattern. If we move all the way down to here, say for example, do we have any pattern at all? If our X to D is equal to 69, do we have any pattern?
Yes, you do.
Yes.
What is the name of that pattern?
No, you don't. Sorry. Your minimum retracement has to be 78.6.
Thank you. So now you are finding it out yourself, and you can stay all right, let's move forward. So that pattern that I draw on that 4-hour chart, this is the pattern, okay? So this is not any pattern whatsoever. So while we are looking for M, we're going to be seeing also different kind of moves that are not possible moves, okay? So, but because we are trading harmonic, that means if that is not a pattern, we're going to miss all these moves, okay? There's nothing we can do about it. That's what we are doing. We just want to trade harmonic, and harmonic is all about finding one particular pattern. If you can't find that pattern, that means you cannot trade, okay? That means you are not following the rules. All right. Well, I see another M. Let's look at this. This is another M pattern. Yeah? Look at this M. Can you see the M that I'm looking at? X to A, then to there. Then I'm looking at that. At that particular point. What kind of harmonic am I looking for in this instance?
A cipher or a shock?
Cipher. I think.
Or a shock. Or a shock.
All right. So how do we know that it's a cipher or a shock pattern?
Because C is higher than A.
Because C is above the A. All right. So if we start to now trace this down, yeah. What kind of pattern is this? Imagine, look at where price stop. Price stop at 79.6, which is almost at 78.6.
A cipher.
All right. So this is cipher pattern. All right. And this cipher pattern, this is now what I'm going to do, because we looking at this chart, we are finding out some few things. Okay. So this is our BAT pattern. Our BAT pattern. How does BAT pattern actually form? The BAT pattern will start from an X point to A point, okay? X to A retracement. Is what is going to give us B. Okay? And that B have to be equal to between 38 to or 38.2, 0.382 or 38.2%. 38.2%. All right. So that is first retracement for BAT pattern. So give us the B. Once we yeah. So to 0.50 or 50% fees. Right. So this is the beginning of a BAT pattern. The X to A point have to retrace back to 38.2 to 50% or 0.382 to 0.382 to 0.50%. Then we're now gonna have what is called the A to B. A to B retracement. We give us the C. All right, so this is for BAT pattern, and then that will be between 0.382 to 1 or 38.2. It shouldn't go past 1% to 100%. All right. So now we want the D point. Our D point will be the complete move between the retracement between X to A, retracement equals D. Okay. And then that D now, which is going to be X to A retracement, will give us 0.886% to, or, yeah, 0.886%. All right. So that is for X to A retracement on a what is called the particular BAT pattern that we are talking about. So for BAT pattern, once you locate your C point for BAT pattern, then you can then have an idea of where the E point is going to be, because you know straightforward that your D point will be 0.886, or if you now want to become much more stronger, 0.886 or 1.618 to 2.618 of the B2C leg. I'll now show you that of the B2C leg. All right. So now let's put this into technicalities, okay? Let's put this into technicalities. So say, for example, this is X to A now, yeah? And then we are looking for the retracement of that, which is going to be at B. If you put your Fibonacci on this, the maximum you are expecting from this X to A should be between 0.382 to 0.5. All right. So you can literally have the wick breaking the 0.5, okay? But you don't want the wick to close or to touch, to close at 0.618, because the moment you have your candle close at 0.618, that is not a bat pattern anymore, okay? That's a different kind of a pattern, all right? And this is how you note the difference between them. So you know that your bat pattern always have to stay at 0.5. It can come a little bit below it in as much as it does not close on 0.618, all right? So that is the retracement, the first retracement that you are looking for, okay? So that particular first retracement, let me send this to the other side. Price label is going to be to the left now. Okay, so that we can see what is going on. So that is one. So now you are looking for this entire move. Yeah, you are looking for the retracement of this entire move. Anything that goes down will surely come back up. So looking for that retracement, if you put your fib on top of here, what you don't want to see is for price to come back above this feed, above that feed. So if I put my retracement over there, okay, and then I come back over here to change my percent from right to left, and I click OK. Now pay attention to this. So what we are looking for is for this move now to retrace all the way back up, all right? The minimum that we're going to be looking for is going to start from about 50%, okay? If it goes past that 50% and still go all the way back up to this 100%, it's still fine. If it stop at here, it's fine. Let's assume it stop even over here, then this is fine, okay? So now you've got a retracement of the A to B leg, yeah, which stop over there. You know, anything that goes up in the case of X to A must come down. Anything that comes down in the case of A to B must go up. So for the ending part of it now, which is going to give us the D points, now what you need for the D points is you now want the retracement of the whole entire move from here to here, X to A, all right? To now finish at this 88.6 that we have here, okay? So, but what you're going to be seeing is you're going to be seeing something else. You're not actually going to see the measure from here, all right? You're going to see the measure from this end here, yeah? And then you are taking it down to this 88.6 for the bat pattern completion, okay? So, that is 1 point for completing the bat pattern at 88.6. The second point now for completing the bat pattern, which is going to be the retracement, the extension of this B to C, the extension of this B to C, all right? So if I delete this, or use the same Fibonacci and I put it down here, okay? Now we are looking for the extension. You remember that this D that we find over here comes here. So now we are looking for this extension to be at 1.618. Excuse me.
Hello, can I ask a question?
Yeah, go on, ask the question.
Yeah, let's say the candle where the B point will be has got a wick, and the wick is between 50 and 61.8. But that candle closed between 38.2 and 50. Where exactly will I put the point B? Is it at the close of the candle or where the wick ends?
At
And
the end
where
of
will
the
at the end of the week? And when I'm now measuring for my C point, will I measure from where the wick is or where the candle is ending?
Exactly, because the tool that we're using, look at this tool now. This is what the tool will do from X to A, okay? Then bring it all the way down to C. As soon as it gets to the wick of C, which is what you're talking about, that is the beginning of the D, of the C, of the, sorry, of the B to C, which is the end of the wick, all right?
Okay.
Yeah, so you are actually measuring from the end of the wick, okay? If you are using the tool. But if you're using the hand and you're just using it in a manual form, just the way that I draw it out, then you have to remember that it's going to be at the wick, all right? So if you want to actually pull your Fibonacci because you don't have this tool for whatever reason, or you just don't have access to UK Trading View, and you still want to be able to do harmonics, you can still do it in a much more manual form.
Okay.
All right, so this is the C. So now this C to D is actually the length of X to A, but the retracement of that X to A back to 78, sorry, back to 88.6, which is right over here. And that's the reason why we have this one. All right, so if I click here, and then I bring it down to here, all right? So that is our 88.6, all right? But harmonics does not end there for the back pattern, all right? So if you now have this 88.6 lining up with this 1.618, which is going to be the retracement of, sorry, the extension of B to C. That's the reason why, can you see my Fibonacci? All right, so I put my Fibonacci at B, okay? So my Fibonacci is now at B. All right, and if our Fibonacci is at B, now what we are measuring is we are actually measuring the extension of B to C. So the extension of B to C will literally go past the whole of B to C. This is B to C. So it will start to come down all the way. When it gets to here, that's 100. So when it starts to go down below 100, that's where we get the extension. And that extension will start from 1.618 for a bad pattern to 2.618. So anything, if the D gets caught between 1.618 and that 88.6, which is what we have here, then that is the beginning of your very solid harmonic pattern. So this is what's going to happen. Let me now put it into perspective for you. So the 1.618 is what we have over here, and the 88.6 is what we have over here. I remember one gentleman a while ago was saying he take his own trade at 1.382 for whatever pattern that we are looking at. So your entry will now have to be anything between these two zones. All right. So you can decide to say that you want to be taking your entry at the last point. Okay. But what you now need now again is this. Let me take off this pattern. I mean, sorry, this fib. Let me delete this fib again as well. No, I'll just leave this one. So what you now need now again is this. You want to measure what is your stop and what is your target. Then your stop and target will start from here again all the way down to here. Now you are looking for extension. All right, now you are looking for extension. So Fibonacci extension, if I start from there and I bring my tool all the way down to here, all right? Okay, so for my colleague, Steve, because he doesn't want to encounter a loss trade, he will actually have a very wide stop, okay? He will actually have a very wide stop because for the mere fact that this pattern are there, they are just high probability in a mathematical ratio. That doesn't mean that all the time price we have to stop here. You see the way that price stop here in this case, which is good. That does not mean that price we have to stop here. So for the benefit of doubt, if price did not actually stop here, yeah, if this confluence, if the 1.618 and the D point at 88.6, if they are on top of one another, like very close to one another, closer than this one, yeah, then you have a much more stronger price level. Okay, if they are a little bit apart like this, it's still strong. Now you have a zone. You know that what you're going to be trading is a zone between the 1.618 and then the 88.6. So this is where your entry in between this zone, any value in between that zone can be your particular entry. So if I delete this again, all right, but for the mere fact that harmonic wouldn't just get to that point and reverse in some cases, all right, so what you want to do is you want to have a stop in place, and that stop will be at the bottom usually of X. All right, so you can have your stop at 1.272, but because we've sampled about 315 trades that we took with harmonics over a period of the beginning of January till March, yeah, all those 315 trades, if some of them hit a stop at 1.27, all right, but none of them, just a few of them out of those 315 trades, just a few of them, which means 1 in 9 of those trades will come and stop us out at 1.382. So you can see that harmonic is not 100% because we can still have one that will just come and stop us out. All right, and those ones that come and stop us out are just the one that will just blaze through this entry without even stopping at all. Maybe because of the news. Okay, they just blaze through the entry without stopping, and then obviously they come and hit the stop over here. So you have to just know that one in some cases can just mess about, but if you've been making profits with 9 of them, you wouldn't really actually worry about one. So in this case, this is going to be where the stop is according to what Steve is looking at 1.382. This is going to be your stop, but literally if you want to be wrong, your stop should come underneath the X, because what tends to happen is the moment price comes underneath this X anyway, yeah, that harmonic pattern of this particular nature should have been invalidated. All right, should have been invalidated. But yeah, if you want to give it a room more, you can give it a room to this level. So now look at it. If your entry is over here, all right, and then you give it what's it called, a room to 138.2, that will give you a stop of about 22 pips. Okay, if now you've gotten your stop of about how much, let's say the stop is about 23 pips. Okay, so you come to this position size, you come here, you say to yourself that my stop is 23 pips or whatever it is. Let's find out again. So from the D point to 38.2 is 23 pips. So you come here, you put your stop there at 23 pips. Okay, then now you know what your account size is. All right, say for example $10,000, you have a risk percentage of say 1.49. If you want to take 5 trades, then each and every trade will come in at that 1.49 divided by 5, which is going to be at about 0.3, say for example. So 0.3, let's do it this way. Let me show you. Calculator. So your risk percentage is going to be 1.49, okay? Divided by the risk, divided by the amount of trades that you want to take. You want to take 5 trades divided by 5, that will equal to 0.29, which is almost 0.3. So let's assume 0.29 is 0.3, all right, percent, because you're going to be taking 5 trades anyway. And then your stop loss is 23 pips, and then you just click calculate. All right. So on that particular trade, the amount of loss that can possibly occur on a $10,000 account will be $30 fixed. Nothing is going to change that. And the amount of position that you can take is going to be 0.13 lots. 0.13 lots. All right. So for people using MetaTrader, that will equate to 0.1. All right. So for people using other platform that can actually read nano lots or a much more better lot sizing, they can have what is called 13,000 units. All right, 13,000 units. The standard unit, yeah, in trading is 100,000. Okay, so if they're having 13,000 units, that is still below standard lot. Okay, and that 13,000 units. So when you're seeing your 0.1 piece, when you're seeing your 0.1 on a whatever, on a MetaTrader platform, that means you're actually taking 10,000 units. That means you're actually taking 10,000 units. You are taking 1/10 of a old standard lot. So that's the reason why when the position starts to move, let's assume you jump into the trade. When the position starts to move, each and every pip will be calculated at what is called a pip, a pip size value. Usually it's about $1. If you have your account in another currency denomination, then that pip size will be, say for example, in the UK, it will be about 0.7 pound. Let me quickly show you how that is working, how that gets worked out. So if you are in the UK or you are in another country, we have what is called a pip value calculator. All right. So say for example, the price of, let's look at a New Zealand dollar right now is this. Some of these things you just need to have a little bit of knowledge of it. So the price is 0.6805. All right. So my account is denominated in United Kingdom sterling. All right. Or my account is not denominated in dollar. So if I choose the currency pair that I'm trading, all right, and this is what's going to happen. Let me show you this quickly. Because it's just good to have a little bit of knowledge about all these things. I don't like when someone is in a business and they don't understand fully the meaning of that business. So 0.6805. Let's double check that. And I'll show you, yeah, 0.6805. That's the ask price right about now for New Zealand USD. Okay. And then if my account currency is in dollar, look at what you're gonna get. Position size. Then I click calculate. So if I say the position size is just the 0.1, which is 10,000 for everyone that have a small account anyway, $10,000 account even. Let's say is 10,000. That would be 0.01. Okay, so that pip value will result into 1. What does that mean? It means that if price move from 0.6805, yeah, to 0.6806, okay, you would have net yourself a $1, okay, if your account is in dollar. If your account is in pound, however, yeah, now it's gonna say, let's look for the price of the pound dollar. Just say, for example, in this case, can somebody give me the current price of pound US dollar so that I'm not just gonna be the only one in the class? Can somebody actually look for the price of pound US dollar for me and tell me? Anyone?
Could take a while. Let me try.
What's the current price of pound USD?
Yes, 1.3029.
1.3029. Okay. All right. So if your account is in pound USD, each and every pip, if the price move from 0.6805, yeah, the amount of pound that you're going to earn will be 76 pence, not £1. Okay. And the reason why it is like that is because the the exchange rate is in New Zealand to dollar. All right. So by the time they are converting the value of New Zealand to dollar in pound, you're not going to be getting exactly $1. All right. So the exchange rate factor into that. and then that will give you just 76 pence. By the time you move to 0.6807, all right, what you're going to be having in your account will be £1.50 rather than £2. In the case of dollar, it will be $2, right? In the case of pound, it's going to be £1.50. If your account currency, say for example, it's in yen now, yeah, I love the yen account. So the peak value is a little bit over the dollar price. No, sorry. Then now we're going to look for the US dollar yen price. Okay. So if we look for USD yen price, say for example, so can somebody give
110.88.
Sorry?
110.88.
110? 88. All right. So if your account is in yen, your account denomination is in yen, a pip value in yen is going to be equal to 110 yen. 110 yen. So by the time your price move from 0.6805 to 0.6806, you'll be having 220 yen increment in the movement. And that is how pricing works. Same thing applies to if your account is in card. Obviously, I've got some people from Canada as well, isn't it? I've got some people from Canada on the call. So what's the price of the USD card? So if your account is denominated in United States dollar, sorry, in the Canadian dollars, what's the current price for Canadian dollar?
That's 1.3347.
1.3347. All right. So for Canadian dollar, each and every, if your account is in Canadian dollar, what you're gonna be having is gonna be if it moves 1 pip, it's gonna be 1.3 pips. Sorry, it's gonna be 1.3 Canadian dollars. It's gonna be 1.3 Canadian dollar. So say for example now, if your account is in Nigerian naira, yeah. If your account is in Nigerian naira, all you need to do is this. Let's now calculate the pip for Nigerian naira because I've got quite a lot of people from Nigeria over here. So what we want to do is we want to know the value of naira to dollar. Okay, so if you go on TradingView, and you can actually see, although I know that most people is not going to have their account in Nigerian naira anyway, but the current dollar price is going to be 357. 357. All right. So if you come over here and we just say this is 357, for example, yeah, for Nigerian naira, then you calculate. So each pip value is going to be at 357. So by the time the price moves from 0.6807, each pip value in Nigerian currency will be almost $714. By the time it moves to 0.6807. So each pip value in Nigerian money is 357 naira. All right. So moving to a second degree or second level, we actually be about 700 now. So pip value in Nigerian currency is that. Pip value in each and every currency can be calculated as well. So moving forward. So I'm sorry if I have to be going deeper than expected, but I think it's good for you to just have a in-depth understanding of the trade rather than just
It's very good.
rather than just having whatever. So when someone is talking about support and resistance, there's nothing that is called support and resistance, okay? Because any support and resistance can be broken, okay? So what you need to have is what is called a reference point, all right? So when you're looking at support and resistance, if I say to you that this is a support, let's assume all this place over here to me now is a support, all right? Oh, sorry, it's a resistance. Someone is asking me a question about, they want to know how best they can use support and resistance. Let me be pretty honest to you, yeah? There's nothing that's called support and resistance because most probably what you fix at the back of your mind is when price gets to that particular zone, then price is going to stop, and that is the end of price. Price is not going to go anywhere anymore, and then you expect price to come down. Everything depends on market condition. That's what we started with. What is the market condition? So if the market is in a consolidated mode, then you can have a level of support and resistance that you are looking at, and it's not going to be the same. You know, it can change, it can vary with 10 pips, 20 pips, 30 pips, but you can't have a fixed support and resistance. So if you want to be trading support and resistance level, you're going to be a reactor in the market. All right. And let me show you how to trade that. So say, for example, now, look at the way price comes down here, comes to this level over here. This is an area of what? Does anybody remember where we get this area from? This blue line.
Monthly.
Somebody said monthly. Any other option?
Blue line is daily.
So blue equals to daily, all right? All right. So magenta. Can you please take down your magenta equals to weekly? All right. And then we've got cyan equals to monthly. All right. So you really want to trade support and resistance, it's fine. It's not a problem. Yeah. But for you to be able to trade it and understand it in a way that's going to be sensible to you, is for you to learn this. Can you see the blue is daily? Can you see the magenta is weekly? Can you see the cyan is monthly? Because if I give you one particular number and I said to you that your support and resistance is 0.6914, the moment you see price coming back above that, yeah, most probably you take this support, this resistance, and you just put your stop over there. If the price break the particular resistance that I gave you, yeah, this is very important. If you really want to trade support and resistance the way that's going to be traded, I'll show you how you're going to trade it. All right, this is support and resistance. All right, for one reason or the other. This is a 15-minute chart. I won't look at a 15-minute chart for my support and resistance. I'll look at a higher time frame. But for illustration chart, because on this particular 15-minute chart, I have all the higher time frame on it. Looking at this chart, I have all the higher time frame on it. I can know that this is my weekly zone over here. My weekly zone combines to the daily, all right, gives me a much more area of higher probability zone, all right. So one thing I need you to pay attention to is this. You see, when you have a weekly zone, yeah, and then you have a daily zone combined together, that is high probability zone. If you have a daily zone right next to it, yeah, let me be 100% certain with you, yeah. A lot of people trade support and resistance, but they don't even know what's happening on that support and resistance zone. But this is what's happening. Once you have a line, an area whereby you have a weekly and you have a daily together, then not far from it, you have a daily zone together. And this is priceless that I'm giving you, yeah? Because you won't get this from anywhere. This takes me years of observation. Just because these two zones are together, you are bound to see price being magnetized to that zone. So price will first of all fluctuate, yeah, in this area of support and resistance before it actually make decision. All right. Price will first of all fluctuate in the areas of support and resistance before it actually, and it will take time. All right. So once you see two levels together, this is the reason why I first of all teach you how to get this level. Once you see two levels together, and then you are expecting that your price is just going to blow through it, and you are expecting continuation, forget about it. Those are the areas whereby you see price magnetizing. And you see what I'm giving you right now are the kind of tools that you can combine with your trading strategy. Once you have this area on your chart and you know this area, there are further areas to come. You know, everything depends on how advanced or how deep you want to go into this. If you really want to have a clear understanding of how charts work, I will give it to you. Even when you now start to follow other educators, that won't be able to give you the clarity as to why something is happening. When they pick a particular zone, why it didn't work, or why does it work, or why one thing happened and the other didn't happen, is because of all these zones. So this is a magnetic zone, okay, that will be attracting price. Before price gets there, yeah, look at the previous magnetic zone. Can you see the cyan line right there? Can you see the cyan line? Can you see the weekly line? This is a monthly, this is a weekly, all right? In between that, look how price is dancing in between because of these two zones. So these are the zones whereby price will be finding very difficult to break through, because a lot of traders is going to be making decision on that. And there's another way of knowing that kind of decision that they're making. So once you get to this area, let me show you what you're not going to do for you to learn how to do it. All right. Once you get to this area, what you are expecting is price has broken from an area of weekly, monthly breakup. Then we have daily and everything over here. So once you get to this area, you know that this is another magnetic zone. It's either you are trading the break of it, yeah, retest back to that zone, take your profit. All right? Until you see a proper break of this area, then you can make an informed decision. When do you actually get that proper break? Can you see the proper break of the area now on this particular candle? So this is the time whereby direction is now clear, when you see that proper break. But when price is getting to area of this resistance and support, you're going to be encountering also different kind of bounce. Depends on how many is together in a zone. And remember, this is the reason why consolidation works the way that it works. When I say to you that when price gets to that high, you are now looking for what? Is sell. When price comes back to the low, because there are so many points. Look at here. Daily, weekly. So over here now, most probably someone is thinking to themselves, this is going to break down. When this break down, yeah, that's the time that I'm now going to enter and I'm now going to start to sell all the way down. All right, so eventually you get your break over here, somewhere around there. But look at what you have below. You see the reason why this break couldn't materialize and give you a follow through, because each and every zone on that chart is completely a magnetic zone that wants to push price in either way. You know what I mean? So if you got a break all the way down to there, once you have all these zones combined together in this area, you cannot go anywhere immediately. You will see all sorts of different kind of tests. And this is where the frustration comes in for you. This is where you're going to be seeing the frustration on the chart, and the chart is not going anywhere. But if you now want to know how to trade it, it's simple as well. All you want to see is you want to see the break of the zone first of all. So you see the break of the zone up, you see the retest back to the zone. That is when you're going to buy. All right, and take it back up to that zone. You are not looking for much in this zone. You are just looking for the distance between here and here, which is just about, maybe it's enough, 37 pips, if you can catch it like that. So this is how to snipe your trade, and snipe it in a much more sensible manner. Once you've got all those zones in a consolidated market condition, you have to know your market condition. How many type of market condition do we have?
3.
Sorry?
3 times.
3. Can you give me the 3 market condition?
Is that trending down, a range, trending down or up?
All right, so it's either price is trending down or trending up, or ranging. Sorry? Or consolidation. All right, so when we are in a consolidation, this is what is called consolidation. You see all this finding the market all together. Because when I'm showing you this and I'm teaching you this is what is going on, some people will be wondering, oh God, how many things am I going to put together now before this thing can actually work? This is the main reason why it doesn't work. This is the main reason why you encounter frustration. If you get to know, all right, look at the move from here to here now, yeah? Just because we don't have much of anything over here, when price actually breaks through this zone, can you see how swiftly it moves quickly all the way down? All right, so what you are now expecting now is this. When you have a break of this resistance over here, all right, every point on the chart is support and resistance for you. When you have a break of this resistance over here, you cannot be too sure until you now see this, a move back down to it, yeah, on a smaller time frame, like 15 minutes. And then you want to take this to this level. That's your target right there. You're not looking for much, because everything is so clustered together. We are not in a trending market situation. If you are in a trending market situation, then you can be looking for more and be looking for more. All right. But the market is not trending, right? So if the market is not trending, is trend going to be your friend at that particular point in time?
No.
All right. So you have to now adhere your rules to trading support and resistance. So look at here. So price gets to here now. You now find your support. Okay. You know that when price is coming up, there's another area of problem over here. Let's deal with it. Let's look at this, so that we can have a perspective of what we are doing and we can get a much more clearer understanding of how chart and price behaves. Okay, so we've come all the way down, which means we've broken this area of weekly and daily high probability zone. We say, okay, hallelujah, glory be to God. We'll speak also of different kind of languages. We've broken that support. Now is the time for price to continue all the way down. Is that not what you're thinking? Because you don't know this is there, isn't it? All right, so price breaks down. You are looking for continuation. Then you got this bounce. Bounce. Why? Okay, no problem. It's still going to break anyway. Then boom. No, what is going on? After I've decided to buy, I've decided to sell. Then you're selling it, then you're looking at it, and things is bouncing and bouncing and bouncing, and you don't have this area, you don't even know anything about this area, then you see price go up above here. All right. So once price goes up above here, if you have this point on your chart, say for example, without even teaching the strategy first, if you have this point on your chart, once you see this, what is this saying to you? Some people will have their stop above here. You know, they will have their stop above here, and all this zone is there. So you have your stop above here, all this zone is there, right? The moment price break this zone back up, this is telling you that no, we are not going anywhere anymore. This is where to take yourself out of that position. You know what I mean? But your stop is here. All right. Then you are looking at it. Don't worry about it, because everything, every little thing gonna be all right. And your stop is approaching, see price take it out, and then boom, price take out that stop. And then you are wondering, so what has really happened? I sell when I saw the break of a support. Yeah, it's a support. So if I give you this place as your support now, are you now going to rely on this place alone as your support? So your support got broken, then you didn't see continuation till your stop will now be taken out, and then you are frustrated that look how many pips is gone again. Look how long I have saved to make sure that I can protect my account. I can have this, and I put my stop in the best possible place. But you know, this is an indication that this is not going anywhere. This is an indication that after the breakdown, we are not going to go much of a place, even if it looks like as if we have a serious break. You understand where I'm coming from, guys, ladies and gents?
Yes.
All right.
Yes, sir.
So this is how to look at price. You need to have all this, and these are areas whereby I refer to as reference points. So how do I now capitalize on this? How do I make use of this? All right, I'm looking at my price coming all the way down. This is an area of support and resistance. I don't care. Price breaks it. I know that my immediate target is somewhere over here. All right. If price gets there, I'm not looking for much, and it will be hard for me. Look what I'm looking for in this zone. Just 12. Out of that 12, I'll be lucky to even get 5, which means if I get 5, it's a scalp. I'm out of that trade, because anything can happen in this zone. You can't capitalize on a zone that is going to break until it actually breaks. All right. So look at here now. So when this happened, what do we have? Do we have a breakup? So price come back and break this place up. Now you are looking for your real move, okay? Because you've seen the confirmation of the breakup. All right, just before we see the confirmation of the breakup, the first breakdown, look at this. The first breakdown where we are expecting continuation occur here, all right? So it takes us 33 bars at 15 minutes. 33 bars times 15 minutes. All right, 495 divided by 60. So it takes us 8 hours. Yeah. And this is what this zone does. Area of frustration, 8 hours for you to make an and that is that is a O session. That is a O either Asian session or a O London session or a O American session of nothing happening. All right. And the only thing you are waiting for in your support or in your resistance is either you are waiting for this. So you are waiting for this break wherever it goes, and then you are waiting for your retracement, which means, look at it. Before you actually take any trade now, before you actually take any trade based on this zone, it's going to take you a valid trade, yeah? So you've seen the break. The moment you've seen this break, you are thinking maybe it's going down, but you have this to yourself as an advantage tool now, yeah? You know that it's not going anywhere, whether you like it or not. You are seeing it yourself now. So from here to here, it takes us 53 bars, all right? 53 bars, 53 15 minutes bars. Let's have a look at that. 53 15-minute bars times 15, okay? That's going to give us a region of what? And then divide that by 60. So that's about 13 hours, all right? 13 hours. 13 hours of the market makers playing with your brain. 13 hours of frustration on a particular pair. That's the only thing that you are looking for out of that pair is, I mean, who is going to prefer a 12 pip move, yeah, to a high probability of 35 pip move? All right. So most probably by the time you have all this on your chart now, you can easily say to yourself, let me look at this chart today. Let me see what is going on. Oh, so we are here, yeah? Okay, this is where we are. I can't do anything over here. If I'm you, I'm not going to be doing anything over here. All right? Because the price is not in any zone for you to do anything. This is what the price is going to do. The price is either going to move to here, gives you 18 pips, and then you see it moving back to here again, another 18 pips. So you are not balanced in any form. This is how you will now trade this. You can now trade this in 3 forms. Say, for example, you can trade this like this, yeah, and then you are waiting for price to come back to it, okay? You want to see the break and wait for the retests, all right? So you're seeing that retest, you're being like, oh, we've broken anyway. Now we come back to retest it. An opportunity. Where is the opportunity going to come in from? You're looking for every single reason to find a bullish candle, all right? So you have this. Look at it. What kind of candle can you see right on that point? Sometimes you'll be wondering what is going on. Is this a magic? Can you see that candle? What kind of a candle is that?
A Gothic candle.
Sorry, no, the small one.
Okay,
That's a
sorry.
doji.
That's a doji. What is that doji signifying?
Indecision and frustration.
Indecision.
It's signifying indecision. At what area?
It's support.
Sorry?
At support level.
It's support.
All right, at the support level. All right. So if you're having a kind of indecision at the support level, what is that telling you?
That there might be reversal.
That there might be reversal. All right. So is this indecision a valid indecision then?
No.
Yes.
No, yes. Which one?
Yes. How do we know?
Exactly. So an indecision that you have in an area whereby there's high probability, possibility of a turn. Yeah? That's a very strong indecision. Any other reaction that you see after that indecision might be the reaction that you want to follow. What kind of a candle is this? Sorry?
Impact.
What kind of a candle is this?
Is a doji too. That's a doji too.
All right. So where this candle is occurring, is there any high probability zone over there?
No.
So
That's resistance. That's resistance.
That's resistance. All right. So we have also different kind of resistance, and this is the reason why support and resistance is difficult for people to understand. So you can say that it's resistance, but what kind of resistance is it? It's a short-term resistance. All right? It's a short-term resistance. These are just resistance occurring on 15 minutes charts. Yeah. So you now want to strengthen up your analysis and strengthen up your charts by taking your trades on a longer term resistance, because there are longer term players, people who we call the other time frame players, other time frame traders. Yeah. All right. So let me give you a little bit of a clue of what happens in the market. You see, everything that you're seeing over here is basically an auction. All right. It's basically an auction, and this kind of auction is an auction whereby buyers are coming in. They are saying, this is the amount of New Zealand I have. I want to buy dollar. Some are saying, this is the amount of dollars I have. I want to buy New Zealand. That is what is going on purely over there. All right. But we have some traders in the market that's going to take these orders from everybody that's coming in. Okay. Those traders that execute the trade are called the locals. All right. They don't have much money in the market, all right? But the only thing they do is they have access to the market. It's more or less like somebody that's working in a stock exchange, okay? They are the one who can see all this same live price that we are seeing, and people are dumping their dollars, their New Zealand onto their hand, okay? So the locals, they can't really move price that much. They can only set a region, a small region for price to move, because all they are looking for is just a small commission on their own business. That's what they are looking for. But if I'm a Royal Bank of New Zealand bank now, if I'm a Royal Bank of New Zealand, if I'm the Central Bank of New Zealand, if I'm a big bank of New Zealand, if I'm a big multi-corporation of New Zealand, whereby a lot of people is buying their materials from, and then I want to transact in trillions or billions of dollars. Yeah? When my order comes to the market, because of my weight, my orders is what is going to move the market. All right? The locals order can't do anything. So when you haven't seen a proper extension in price, when you haven't seen price breaking out properly, that means there's no big players in the market. All right? And that's why I wanted to show you about open in relation to previous day and value area. I will quickly delve into that a little bit. I've got about 25 minutes. I want to finish the class exactly around 10 minutes past 2. About 10 minutes to 2. All right? That's the time that I want to finish the class. So I want to show you, I want to open your eyes again to another thing that's going on in the market. All right? Do you know if this market open or closed?
It's closed.
All right, so this market is closed, right? Do you understand what I discussed about this indecision candle and the area where it's occurring?
Yes.
Yeah? All right. So say, for example, now you saw this breakdown, okay? When you saw this breakdown, what is this breakdown of this high probability zone telling you?
It's fair to buy.
Sorry?
No, sir.
A retest. Is it a retest?
Sell.
So you will sell this.
Mm-hmm.
But why would
No.
you sell it?
No.
I wouldn't sell it. I wouldn't sell it support.
You wouldn't sell it support.
No.
All right. So now you are bringing yourself back again. Remember, this area is an area of resistance. Price went to it, bounced back, went to it, bounced back. All right. But pay attention to this now. Yeah. Look at the first time we break down to the low. Yeah. Pay attention to what the candle is telling you. Pay attention to the orders. The market is purely orders. So we break down the low. All right. We come down there. We move back up again. We come back to that low, that same low. All right. Look at the value of the low over here. Pay attention to this. Can somebody give me the value of this low? Let me give you the trick in the market so that you can start to open your eyes. What is that low?
0.67756.
Give it to me again. What is that low?
0.7743.
Is that a low? All right. So I want you to check over here. This says O for open, H for high, L for low, C for low. When I point my candle, when I point my cursor on the particular low that I want you to check, yeah, I want you to tell me the value. What's the value of that?
7739.
All right. So pay attention to this. It's not a magic. But you understand what goes on in the market. 0.6733, right? Zero 0.67. What is this low? What is this first low?
0.6774.
0.6774. So 0.6774. Right? And then this low is 0.6773.
0.6773.
Right?
Right. 3.
Yes.
So which one is lower?
Three is
The 3.
3 is lower than 4, right?
Yes.
But initially, we first of all got 4, right? And now we have 3. Okay. What is the low? This is another low, isn't it? What is this low?
Yes, 6.
So on this particular low now, 0.6776. Okay. All right. So traders are in the market. If values for you to buy and sell, you remember that you just buy and sell. And when you buy and sell, you buy and sell, isn't it? So if there are more traders that have got 0.6773, they will push the price back down to area of 0.6773, especially when price has gone up. All right. So from this low, price has gone up. Price come back down. When price get back down, we saw a what? A doji, isn't it?
Mm-hmm.
And this doji is a sign of indecision. But does anybody take note of the numbers where that doji is occurring? No one takes note of that until I start to tell you now that those are what is important. So you are looking at your low at 74, you are seeing 73, that is lower than that. You are expecting for you to get most probably 72 or below. Now you have 76. And then you can see the graduation, low, higher low. What kind of low do we have there? What low is that? Now we have 67, 79, right? I'll show you again. And this is how you're going to know. Look at the low. Now we have what? This low. What is that low?
The higher low.
What is the value?
Oh,
You can easily read the value from here, right? From that L.
6782.
No, 67797.
6779. All right. So when you are now looking at this, look at this. 4, 3, 6, 9. Are we moving up or we are moving down?
Oh.
So we are moving up, which means we are running away from this low. We are not only running away from this low, there's no more orders. There's no more any price. There's no more any lower price. That's the reason why price gradually start to break all the way up. So we get to this area technically now. This is an area whereby we are encountering resistance. This is an area whereby we should see price to continue to break down back again, isn't it? Hello? At the area of resistance, this is an area of resistance, price moves down, isn't it?
Yes.
Another area of resistance, price supposed to move down.
Yes.
But we didn't move all the way down again. What is that telling us? Is this telling us that the sellers are stronger or is it telling us that the sellers are losing steam?
Sellers are losing to the buyers.
All right, so the sellers are losing steam. So when the sellers start to lose steam, when we get to the resistance again, if there are sellers in the market, what are they supposed to do? They're supposed to push price down, isn't it?
Yes.
Yes.
Eventually, they gave up. Can you see where the sellers gave up completely? All right.
Yes.
So, and they gave up at a technical area of resistance. When price breaks a resistance and price comes back to a resistance, become
Support.
So what do you do at support?
To buy.
To buy.
Look for every opportunity that says buy. So when you see this will shake your heart first of all and be like, really? I'm looking for a buy. Let me be patient. So you don't just change your decision when you've seen a pure technical break, and you didn't just see that pure technical break. You can see that there's no more orders. It is glaring that the orders are literally doing what? Going all the way up. There's no more orders. There's no more sell orders below. The orders are literally going all the way up. And can you see the reason why trend line works? So when this comes all the way down, if you are doing your trend line, so you got the first trend line break, isn't it?
Yes.
So you are looking at it and saying to yourself that this area is supposed to be a support for me, you know. I'm expecting the miracle of support to do what? To happen. So when you see this break and then you now see the continuation, is there any continuation to the downside?
No.
At what area is there no continuation to the downside?
After the trend line.
Sorry?
After the trend line.
At area of support. So you have double support over here now, yeah? This is a resistance that's broken, turned to support, all right? It's not just a support. You have the daily and you have the weekly over there. Now you have your trend line, which is measuring a short-term support and resistance, making 3 reasons for this place to be what? To be a strong hold for price. All right. So even when you see a fake out, this is what the market maker will do.
That's what I did. Yes.
You understand? This is how they will play with your mind, because they know that your mind is so feeble. Anything that you see, you just want to jump in. All right. You would have forgotten your area of support and resistance just mere seeing it breaking. Just wait. You have one thing that you are thinking about, resistance turning into support. Let's see. If it doesn't hold, well, anyway, if it now starts to break down, what have I got to lose? Or what have I got to gain? I'm only chasing, look at what you will be chasing. 9 pips. Meanwhile, you've seen this break. This break is giving you the opportunity to see this move to this level. It's giving you that 40 pips. Can you see the difference in the way to navigate price now when you are in a consolidated market condition? It's completely different from the way to trade a trending market condition. I know that it may sound a little bit hard, but you can see that this is all I want you to understand. Okay? I want you to understand that when you break an area of resistance, all you are looking for is a retest of that resistance zone. Yeah, if you have a couple of things that can line up that zone for you, line it up and just take the higher like this. And you would have seen everything that this place can give you, that you are looking from ear to ear. So if you're looking for your trade, look at this. If you're looking for your trade to be from ear to ear now, will you be happy for this little 9 pips, or you are looking for that 40 pips?
40 pips.
Exactly. And then everything is lining up. It's good to be able to see what is lining up. So before you jump in, you want to see the lineup. All right, look at the possibilities that we got over here now, yeah? Everything is coming down. Are you do you want to make a decision around here, literally?
No.
So you don't want to make a decision around, irrespective of whatever the case may be. You are looking for areas like this, and you know that when you get to this area, what do you have? You have daily, you have weekly, you have another daily. This area is going to be an area of
Oh,
Strong support.
A very
Resistance.
what?
Resistance there.
Resistance.
High probability.
A very strong area of resistance.
Yes.
Yes. And then you are not just having that very strong area of resistance alone, you are having 633, which is more or less like an overbought level around this area. So when price move up and even decide to blow up past this overbought level, and you now start to see price coming down. Yeah, you starting to see price coming down, you will remember that, wow, okay, it looks like as if we break an area of resistance. But what I'm waiting for is price to get back to this area and find a support. Yeah, but you've forgotten, you're not seeing an overbought scenario. An overbought scenario can literally lead price all the way back to this trend line and all the way back to this level again. So your next area of acting in a trending, in a consolidated market condition will be this zone over here. Yeah, but you will now be remembering again. You'll be remembering clearly well. Bear with me a second, please. You'll be remembering clearly well that if price breaks this area and price is coming down, you have your trend line over there, and that might be a place whereby you want to take profit should in case this trend want to continue to fall. Is that understood?
Yes. Say that again.
Yes.
All right, so let me go over that again, please. So what I'm saying to you is this: we are following this trend all the way up, right? We started to build this trend line, okay? This trend line starts from here. The best possible place to enter this trade is when you have a confluence, all right? So if price is going all the way up and get to this area and price bounce all the way back down to this trend line, is this trend line as strong as what we have over here?
No.
All right. So this trend line may just respect price just slightly a little bit, but it's easy for price to break this trend line and come back to this.
Yes.
You see where I'm coming from? So that's exactly what I'm saying to you. So when you're using your trend line and combining your trend line with areas of further high probability zone, then it will start to make your trend line works much more better. So in trading, it's not just about one point. It's about confluence of points. So with support and resistance, you want to be able to build it on further things. You want to be able to build it on more candlestick scenario. Sorry, whoever asked this question, I hope I'm answering the question. Please, if your linguistic I4, is your question answered? If you are still there.
Hello, Mr. Bola.
Yeah.
Please, can you still use a Fibonacci with support and resistance to make a decision while trading?
Of course, you can still use that as well. All right, so let's employ our Fibonacci and see the magic of Fibonacci from this high to this low now, yeah?
Okay.
That's the reason why I'm saying it's not just about one thing. Now you are learning all these tools. They are becoming much more powerful for you. All right. So what area are you going to be looking for on Fibonacci?
50% or 61.8.
Do you have 50 or 61.8?
Yes, I think we have 61.8. I think so.
You have 61.8?
Yes.
Where do you have 61.8?
At the support. Yeah, support.
You feel good about this trade?
Yes. Yes.
Is it becoming stronger for you?
Yes. Sorry, Mr. Bola, can I say something?
Yeah, go and say something, please.
Yes, like this Fibonacci you applied, is it possible to use to leave harmonics and use only Fibonacci? Because I think I'm feeling that that harmonics and Fibonacci have the similarities for me. So I don't know, must you know the two, or can you just apply only fib instead of knowing the two?
All right, good question. You see, as a starter, there's no need for you to complicate what you don't know. All right, so this is, you can just use your Fibonacci alone, but look at this. Look at the beauty of knowing every single thing. Jack of all trade, master of none. It's a complete lie. Yeah, Jack of all trade, master of seer. You'll be able to see what others cannot see. So when you have your B at 56, what are you looking for?
Retracement.
A retracement of 50 level. What kind of a pattern are you looking for?
You're looking for a bat if it doesn't touch the 61.8.
All right, so you're looking for a bat, isn't it? Do we have a bat pattern here?
No.
Sorry?
Yes.
All right, so at that bat pattern, what happened at the bat pattern? Can you see the drop?
It drops. Yes.
All right, so you can use your Fibonacci alone. There's no problem about that, okay? But as soon as you start to use your Fibonacci and price start to go up, if you do not have this daily zone there, if you do not have this daily and weekly zone there, yeah, you are not seeing everything on the chart in a much more clear manner. Even in fact, when you now use your 61.8, yeah, then price start to go up, then you start to dance, and suddenly Mr. Harmonic pattern show up. What are you gonna do over here?
Question, please.
Sorry?
When you finish, I want you to ask a question.
All right, no problems. So what I'm trying to say to you is, please, you can easily use your Fibonacci alone if harmonic is still a little bit complicated for you, okay? But you can see
it's actually complicated for me.
Sorry?
It's actually complicated. I'm still learning from you. It's complicated.
All right. So let me show you this. Let me show you this. What do I say you should be looking for when you're looking for harmonics? Can you tell me what you are looking for when you are looking for harmonics? I'm not saying you should do it, but just tell me two things that you are looking for in harmonics. You are looking for either a W. Look at this.
W.
Look at this. W.
To be sincere, Mr. Bola, that harmonics I'm still learning it. I've not understood it. I don't understand it. But I know that retracement of
calm down. Just calm down. Just calm down. You cannot know everything in one day. I don't know everything. All right, you can know every single thing in one day, but this is a W. Does this look like a W? What you are looking for is very much more deeper retracements. Yeah? So if this is looking like a W, just have that at the back of your mind that the possibility of a W for me. Don't let me sleep. Let me be awake. Let me be fully awake. This is forex market. I don't care whether anybody understand anything or not. You know what I mean? In fact, to be deadly honest with you, you can do this as well. Look at what you can do with your Fibonacci. So if I reverse this, so if you are cool with Fibonacci, it's so good. What do you have there? So if you are cool with Fibonacci, it's so good. What do you have there? What do you have? What do you have?
62.3.
Sorry?
1.6.
This is the Fibonacci number that you have over there. Fibonacci number that you have over there.
1.618.
1.618. So if you have your Fibonacci, they move from here to here, they'll retrace back to 61.8. The target is at 1.618. Okay.
When you say target, what do you mean?
Your target profit.
Your target profit. Okay.
So if you have a retracement down to 61.8, your target profit in a situation like this is always going to be at 1.61. In a situation like this, always going to be at 1.61. You can take your first profit at 1.38.
You can take your first profit at 1.38.
You can take your second profit at 1.6.
Take your second profit at 1.6.
Okay.
Yeah.
That's
So
for a fact.
that will now give. Hold on a second. I want to ask, how do you measure your fib on the harmonics? Is it from B to D? All right. So let me show you. All right. So this is what I'm.
It's breaking.
Sorry.
You're breaking.
Echo, there's echo.
I won't be hearing you.
Not be hearing you. We need to mute some people.
Hold on a second. I want to ask, how do you measure your fib on the harmonics to give from B?
I've seen the question, yeah. All right. So what I'm going to do is, I want you to type your question. I'm going to mute everybody.
Can't hear you.
Sorry. Right. So back on. Can you all hear me?
Yes.
Yes.
All right. So literally less than 8 minutes to finalize the class. This question. Someone was asking me a particular question. 1 second. Okay. All right. Sorry, I had a call. So the Fibonacci extension, let me show you this, yeah? If you want to measure a move that you expect to be going up, all right? So you start from the high, then to the low, all right? So Fibonacci training could have been for another day, but if you want to know, then we have what is called a retracement channel. The retracement channel, yeah, start from 61.850 and 30 and 382 or 38.2%, all right? In which case, if you have a retracement back to 38.2%, like in this case, it's almost the same thing as a retracement back to 61.8. Let me show you what that means. You are measuring this move, yeah, the move from here to here, that the price dropped down 60%. Okay, so you actually get a discount of 60% of the entire move. All right, but the way to look at this is simple. When this move is going up, you can see that this move breaks an area of resistance. All right, and that area of resistance end up becoming that area of support. And this is what we call structure right here, all right? This place here that the price breaks and come back to retest is what we call structure. And this is how you can start to trade your support and resistance, all right? So in this particular structure, you want to look at what kind of retracement are you having in this structure, all right? You want to look at what kind of...
Daddy, my teeth is out.
Oh, interesting. Lucky you. You want to...
Gonna get me an uppercut.
Oh, then. You want to look at what kind of retracement are you seeing in this particular structure. So this is the area whereby when price move all the way up, you now get 60% discount, 60% discount. Look at what you're having. So you're having situations like this. You're having what we call confluence or line up. Yeah, confluence. So what are you confluencing together? So one, you have previous daily and weekly you have previous daily and weekly levels, and this is institutional trading to the core. And when you have this level, what do you have to do? You have to be patient, isn't it? Patient with those levels. Have a bit of patience. And two, you have 61.8% Fibs retracement. Okay. Three, you are now counting it. You are now becoming much more happier. Three, you have areas of previous resistance. If you can see it, resistance turn to support. Four, you have trend line support as well. Okay. Five, you have price retesting area of support or resistance or structure. We've got 5 reasons to be able to take the trade to the next level. The only thing you want to look for is what is the reason why you're not going to take this trade. All right. The only reason why you're not going to take this trade, let me copy this and send it into the chat room. Okay. All right. So for all my harmonics traders, we're going to do another session. All right. Hopefully we can do another session in the midnight or in the night today, whereby we're just going to concentrate on harmonics. All right. So if you know that you're not going to be good at harmonics, you can just come and learn and then just listen. Okay. Listen, keep your question for some time. Let's be able to look into the charts for the new week and then be able to find some harmonic pattern left, right, and center and continue to build harmonic skills. Okay. For the people that attend last week's session, I know that we had a very great session. I would like some feedback on this session as well. I would like to know, what do you think about this session? Is it something that you enjoy so that we can carry on with it? And then obviously, if I have time much later on in the evening, I want to go into further harmonics pattern, and then we can look into adding things together to make our application.
Yes, last week's session was fantastic. Today has been awesome. I enjoyed it. Learned new things. Thank you very
I
much.
really appreciate it, Bella. Thank you so much.
No problems. Who is that? Who is that? Who is that? Let me see who I've got in the room. I've got, hold on for me. So I've got sorry, I don't know how to pronounce it. Hazel. Where are you from? Where are you from? All right, so I've got Humphrey. I know Humphrey is from Ghana. Jayeshwar. Where's Jayeshwar from? You're opening my eyes. I'm glad. Who is Ellen?
Hi, I'm from UK. It's Jayeshwar here.
Oh, Jayeshwar is from UK. What's your name?
My name is Jayeshwar Ishwarlal.
Okay, pleased to meet you. What part of the UK are you from?
Leicester, Midlands.
Oh wow, Leicester.
Yeah.
Wow, interesting. Well, that's about 3 hours away from me. I've been to Leicester over the last. I was in Leicester in February.
All right.
Yeah, actually spent Valentine in Leicester.
Oh, that's nice.
Yeah, I was in Marriott.
Okay. Yeah, it's quite
Yeah.
nearby from where I live.
Exactly. So hopefully we can come to Leicester and keep one big event and bring a lot of people into trading. Yeah, someone is calling my name. Who is that again? Joshua, pleased to meet you. Thank you for
nice
joining.
to meet you too. Yeah.
I hope you benefit something today.
Yes, I did. I did join quite a bit late, but it was a bit helpful. So yeah.
Okay, thank you so much for
Thank
that.
you.
There's a funding option going on for us as well. If you are interested, you know how to get in touch with me. All right, someone called my name a while ago. Who is that?
Lavanya.
Sorry?
Lavanya.
All right, can we let the lady speak first of all, and then I'll speak to Mohammed in a minute.
Okay.
I'm sorry. This is Lavanya calling from South Carolina. Thank you so much.
Here we go. My maths teacher.
Yes. How are you?
Interesting. Pleased to meet you.
Same here. I was going to ask on your next call if I still haven't figured out how to put like the extra, like the 88 on the fibs. If you're going over that, I tried what you said and I couldn't get it on there, but everything else I pretty much got, but I could not figure out how to get those fibs on there.
Sorry, I kind of missed that. Can you please bear me a second, please?
Can you hear me? So I was saying, when you do your fibs, you have extra numbers on there, like the 886 and the 1.13. It doesn't show on mine, and you were trying to tell me how to put it on there.
Okay. So you mean on the fib?
Yes.
All right. So sorry about that. My fib is a little bit complicated, but there's a reason for that. All right. So if you want to do that, basically what you want to do is well, guys, you want to come to the fib and go to settings, okay? And out of the settings, you can start to input your numbers in here, all right? And once you input your numbers, then obviously you can click OK, and then these numbers will reflect, okay? But we can do another training on that very soon as well, probably towards the end of the day for me today. Might be a good time. Yeah?
Okay, that'd be great.
All right, no problem.
Thank you so much. It's nice meeting you as well.
Thank you. Who else do I have? Mohammed.
Lamek.
Sorry?
Lamek.
Yeah, go on, Mohammed.
No, I'm saying LN is Lamek.
Lamek. Lanex.
Lamek.
Lamex.
Yes.
Do you want to send that into the chat room so that I can get it right?
Okay.
Welcome, Adinike. Thank you. Lamek. Okay, Lamek. Where is Lamek from?
Namibia.
Oh, Namibia. I remember Lamek. Oh,
yes.
How are you doing?
No, it was quite good.
Great. So, what do you think?
I think I need more sessions on harmonics.
No problems. We're definitely going to look into that. It's just because Mother's Day is coming up. I have to just deal with the family a little bit as well, so that they don't feel neglected. Looks like as if trading and my family in the trading world are taking me away gradually. You know, I've always been taking me away over the last 12 years, just like that in this field. But yeah, it's becoming very interesting for me. It's becoming much of a powerful journey for me. I mean, I just want to see life of people impacted in a positive manner. You know, I want you to be able to do the same as well. You know, and I want to be able to provide as much as possible help that I can provide for everyone to be able to excel. So don't worry, you've got my backing. I'll continue to be there. I will try my best to put you in tune. You will be able to do more classes, definitely. And obviously, what is most important is that don't think you'll be able to get it in one day, all right? Little that you gain from it today, when we come back into the class tomorrow or later on in the day, we'll be able to do more. Because I would still want to do cryptocurrency, but I realize that quite a lot of people just need to keep fine-tuning and fine-tuning. I'm actually looking to develop quite a lot of leaders that will be able to take on the course the way that I take it on. And then this is the step to get it done. You know, if I do not open your eyes to so many things for you to see things clearly, then obviously you might not be able to do it. But yeah, don't worry. We'll do another class most probably towards the end of the day today. What really took up my time last week was this funding thing. It's quite sorted now. So live trading too will begin again. And then yeah, we just take things forward little by little. All right?
Okay.
No problems. Any other question, answers?
Okay, just looking at the bed pattern that you were drawing just now.
Yeah.
How would you set up your take profits if someone had gone into this?
How would I what?
Your take profits on the bed pattern, which is on this.
All right. Good question. Good question. Bear me a second. Let's quickly show that. All right. So first thing first, can you see the W shape?
Yes.
All right. You see this W shape, right? So if you can see the W shape, if I come all the way here and take it to that low, all right, and I'm pushing that to that level, okay, which give me 55.5 straightforward. I know that I'm looking for a pattern, not even a cipher. If it's a cipher, I'll be looking at my C over here. But because I have my C right here, then I'm looking for a bad pattern. And that bad pattern, I want to take it all the way up to what? What is the D zone for bad pattern?
The 88 point.
So 88.6, somewhere around there. All right, so that's the end of my bad pattern. So with this particular bad pattern now, my target for target profit will now start from the C.
Okay.
We now start from the C to the D. Okay.
Okay.
Is that standard for bad patterns?
Sorry?
Taking profit at C, is it standard for bad patterns?
It's standard for all the harmonics pattern, okay?
All harmonics, okay.
Yeah, so from C to not just the D now, but to the end of this candle. You see the candle? The D was before the candle finalized, all right? So, but when the candle finalized, it's going to be to the end of that candle, okay?
Okay.
Okay.
All right. So in this case, my first target profit, you see the same level of 61.8, yeah? Right. You see the level of 61.8 right here, yeah?
Okay.
Is the same level as 38.2. Okay, it just depends on how you structure your chart. So if I put an horizontal line on it right there, yeah, that green horizontal line, normally is 38.2. But what I'm going to do now is I'm going to flick this around, settings, and I'm going to go to reverse. All right, when I go to reverse, I'll click OK. All right, so when I click OK, can you see that it's the same as 38.2? Let me take the...
Hey, Francis, are you on post?
Yeah.
Can you see that
No
it's
problem.
just open
You got there, what time you got there, 10?
Yes.
All right, so that your 2.382
7?
is the same thing as 61.8, and that's your first target. All right, that's your first target. So what you would have done is you would have put your pending order on this Z, okay? So, and the level of the pending order will come in at 68.23, all right? 68.23, which you're gonna see over there. All right, once you draw your harmonic, all your harmonic points are on this side. 68.23 is your pending order, and then your stop now for this particular order. Your stop for this particular order will be above the X, all right? And that is when you can flicker this above again, which is going to be above the X. Let me do this. Let me just quickly do this. All I have to do is click reverse, all right? So from my C to D level again, the stop is going to be at 1.382. All right, normally, let me now give you this trick, okay? You remember you had your daily and weekly right here, yeah?
Yes.
You don't actually want any price to come above this daily and weekly, because the rules of daily and weekly is If price comes above it, all right, then you want to look for a retest, and then you want to look for possibility of taking price back up. All right, just like we've done over here. So my own stop, I won't actually put my stop above here. All right, I will have a very small stop because of every other thing that I'm combining in the market, and my stop will be somewhere above here, maybe about 9 pips, 10 pips. That's where I'm going to be looking for my stop, because my stop over here will be about 17 pips. 17 pips is still okay on a smaller time frame. It's not bad. So for 15 minutes harmonic, 17 pips is okay. So for 15 minutes harmonic, you can use your 1.382, okay? It will give you a smaller stop. If you have a 1 hour harmonics, then it might be more. If you have a smaller time frame harmonics, then you can continue to use your 1.382, which is good. All right.
And on the 1 hour harmonic, what would you recommend then, Bola?
On the 1 hour harmonics now you now have to learn how to combine all these daily, weekly, monthly level to see where it's much more probable. You know, you can use the 38.2, but in some cases, the 38.2 might be about 80, 90 pips.
Yes. That might be too much.
Exactly. So now you have to find a way to refine that and restructure that. I will teach that as well. Okay.
All right.
All right, guys. Thank you so much for your time. I hope you benefit from this session. I mean, what I want to say is this. This is our personal chat. Let me send it here. This is our personal Telegram. If you want to see more of this content that will be taught, that's on the Telegram. You can join that Telegram over here. It will be the same Telegram that I'll be using to send further funding option, because in our main Telegram, there's quite a lot of people there as well, and I don't want people to miss important information on the funding option. So have that link. You can join in, and then I'll see you in that Telegram group if you are not part of the Telegram group already. If you're part of the Telegram group, then it's fine. But whoever that have applied concerning the funding, I will try my best to add everyone to the group as well. Thank you so much for your time. I really do appreciate your time. Thank you. I'm going to make the recording of this available as well, and then I'll upload it. Okay. God bless you to be God bless every single person, all the 30 people that attend this.
Thank you. Thank you.
Olugbemiga, Shanso, Damex, Felicitas, yourself, Humphrey, Lanek, Olugbemiga, Ade, Nick, Blue Phoenix, Fumbi, Jaisho, Joseph Mensah, Toby Olumide, Winichi, Courtney Elaine. I just want you guys to know that you are the strength behind my movement, and you are the one who give me the strength to just power on. Thank you so much. I appreciate your time.
Thank you for your time.
Thank you.
No problems, guys. No problems. Thank you so much. Thank you. I mean, this is what I do, and obviously, if I can help, I'll just help you guys out. So I'm gonna put an end to it now. You have a lovely day, and then obviously you meet me back in the room where I'll be able to share my next time that I'll come on. All right.
Have a nice day.
Have a good day. Bye.
Thank you. Bye, everyone.